JJ the CPA here. Hope you're doing well. Thank you so much for being here today. I'm doing this kind of as a courtesy, but also to say thank you. If you got this invite via email, it's because you've bought at least one of my seminars or have been a part of one of the groups, and consider you friend and family. And, there's been some new things going on with the ERC. And I thought, you know what, might be fun to do a little bit of an update. And why charge for that? Just invite all of my friends, if you will. So with this, we're going to get rolling. Just a quick note, today is not for CPE. We are just here going through the latest on the ERC, and then I'm going to be available for Q&A. Today is sponsored by ADP that does payroll. They are just phenomenal. If you're not already working with them, if you're here, you know who I am, but a little bit of my bio. Today is for informational purposes to either aid in your helping of clients or to add to the knowledge that you have to then take to your advisors. So let's talk about on the Q&A session. You can enter that into the chat. Feel free to enter the questions that you have now. You don't necessarily have to wait. I will be answering questions till about 3:30 p.m. Central Standard Time. Now, this is being recorded, so do not provide any information about yourself or your client. Your question, the name and picture you have placed on the screen name on the Zoom will be included in the recording and will be available to the public without any ability to do an edit. So if you're asked to unmute yourself, and you do, well, the video of you, if you show your video and your voice, will also be recorded and then included and available to the public. So you release all rights to this, and you won't be able to request it be removed. So if for whatever reason you have your full name as your screen name, you do have time to go ahead and rename yourself, so to speak. And looks like, Coop, we got a few in the waiting room because I see them popping up on my other screen over here. But with that being said, we are going to be going through questions, but you won't be able to provide a specific example for your circumstance or your clients. If you provide such details in the chat, I'm just going to have to skip over your question. Now, I get you might have a question that requires some explanation, but if it starts out with, I have a client, or includes dollar amounts, then it's probably going to be too detailed for me to be able to cover in the format that we have today. So you want to formulate your question in a general manner. I may not be able to answer all the questions. Who knows? We'll see. I will select the questions, though, randomly. So even though you're putting them in now and you might be first, it may not be that I answer it first, because I'm going to go through the questions and I'm going to first tackle the ones that seem more general in nature that might benefit the audience overall. Now, it would be best if you be present during your question in the sense of when I finally get to it. And the reasoning for that is that I'm known to ask you to unmute yourself to either clarify what your question is. So if you're not present and I can't get clarification, then I'll probably just have to skip on and go to the next question. Letting you know, I've got ADP now on my side. And so because of that, we have the ability to do some monthly seminars at no charge. So I've got one right after the holiday that many call Thanksgiving. And that's going to be on Tuesday, the 28th at 12:30 for 1 hour. Just going to focus in on year-end strategies. And this is really meant for small business and self-employed, this specific seminar. And I'm going to plug it this Thursday and this Friday. I've got 2 seminars. Now it's kind of late to the game to announce it. So you're getting each of these at half of what I normally charge to attend, but I'm trying to boost attendance. So this Thursday, 4 hours, this Friday, 4 hours, going to go over business and then individual. I'll tell you this, if you've attended any of my updates in the past, I have really revamped it, and I've got some deep dives related to this. So anyways, come and get some CPE this Thursday and Friday, 8 hours worth. Letting you know we've got ADP as a sponsor. If you sign up or you send your clients, You can get 3 months free. I'll tell you this, fellow tax pros, when you're ready to hand it over, they will buy out your list at a pretty penny. So what you want to do is do everything with the JJ the CPA team, which is Erica and Haley. And we're going to be just talking about ERC today, but Erica and Haley, are you on? You just want to come on and just say hello real quick to everybody? If we're able to unmute them. I don't know, maybe Coop's got them muted. Well, with that being said, Erica and Haley are here with us today, and so appreciate ADP and their sponsorship, and hopefully you're able to work with them as well. So today we're going to be going over the update. I do include this in seminars for CPE, so I just included the things that I include when I do that, even though it's not for CPE today. We're going to be talking kind of a general overview, due dates, checking on the status of ERC, when to report, where to report, recap of the IRS nationwide webinar. I did attend it last week. IRS announcement of their delay. What does that mean? Recent announcement of the specific and new withdrawal procedures. So we're going to go through those in detail. Also, the IRS released an IRS memo 23-005 talking about whether or not an employer can qualify for ERC when their supplier is down. They gave 5 scenarios. Going to walk through that. And then we know that we have to amend an income tax return to reduce down wages that were deducted in terms of that ERC. So it increases net income in those years, therefore taxes due, and that very well can lead to then a penalty, almost automatic. So I'm going to go over what's called the first-time IRS penalty abatement program that might be able to help in those circumstances related to income tax liabilities. Hey, I did want to mention to you, I was on the horn yesterday with Erica and Haley, and if you sign up for Account Connect, which really costs you nothing, you are going to get a free U.S. Master Tax Guide. So on the page that you got the link here for the Zoom as well as this PowerPoint, you should see a U.S. Master Tax Guide. If you click on that, you can actually do this by yourself by just following the steps. Or you can contact Erica or Haley. One thing to note is that if you do have just one customer, one client with Account Connect, it includes all of this information, able to get information related to your client. There's a CCH resource library free with it archived, and a dashboard. There's a ton of calculators involved with this. So I find it now as a main resource for me, especially putting together my seminars and getting information about my clients. So also a lot of benchmarking information about employers in general. And then, like I said, CCH resource library, and also including things related to states. So very, very valuable there, that they've put a lot of time and money, and it was built by accountants for accountants. So let's get into our update. Now, what would make sense is, why don't we just do a quick recap of the ERC? So we know that we can take ERC even if we got PPP, which was a major change to the law at the end of 2020, almost 3 years ago now. It's retroactive in the sense that any wages from March 13th of 2020 through the date that it ended, you are able to then go back, and if you have a qualifying period with qualifying wages, then you can still get this ERC credit, as you know. Now, any wages that were used for another credit or PPP loan forgiveness then will not be available to be for ERC purposes. Now, the credit is 50% in 2020, 70% in 21. Now, that's the first 10,000 of wages for each employee in 2020 for the entire year. In 21, that's 10,000 per quarter. And so it's basically up to 10,000 in quarter 1, up to 10,000 in quarter 2 and quarter 3. We know that if a business is a recovery startup business, they can also qualify for fourth quarter 21. Now, their credit is a max 50,000 overall for any given credit, third or fourth, that they could qualify. Now, again, it's 10,000 max wages for the entire year of 2020 that get included, and then 10,000 max per quarter in 21. Now, when we talk about the terminology of qualified wages, that includes employer-paid health insurance. So we take the employer paid health insurance, we take the employee's wages, we add those together, and then it's 10,000 max per employee. So unlike PPP, it is not for ERC 10,000 in wages plus on top of that the employer paid health insurance. You got to add those together to then determine the max per employee. Now there's a lot of kind of easy misunderstanding related to this, but you look at the head count of full-time employees in 2019 for the employer, and whatever that head count is, that is locked. Now, it doesn't matter if those employees continued to work into 2020 or in 21. All of those employees could no longer be working for the company. It's irrelevant. All it is determining is one thing: what's the head count? Then when we look at 2020 and we look at 21, based on that full-time head count in 2019, you don't take into account full-time equivalent employees, by the way. Then that determines if you're a large or a small employer in 2020 or in 21. So in 2020, if you're 100 or less employees full-time in 2019, then you're a small employer. It's 500 employees or less in 21. Now, the big difference is that if you're deemed a small employer, then you get to include all the wages of all the employees, whether they worked or not. Now, with this credit, it is not limited to Social Security taxes at the employer level, so it is refundable beyond that. For the most part, this is not available for more than 50% owners or their spouses. Family attribution rules apply. And if there is an owner that owns more than 50% and they have no living blood relatives, then they would be the only one that could qualify in being a more than 50% owner. Self-employed on their self-employed earnings don't qualify for ERC. Now, if a self-employed has employees, they do qualify. Now, there's two ways to qualify here. It's either or, so both things don't need to happen. It's governmental order, partial or full suspension, and then only those exact days then get included. If you only read the first sentence of what the IRS says in IRS Notice 21-20, it says that in the quarter in which an employer has a governmental shutdown, they qualify for that quarter. That's telling you then they qualify to report on Form 941X. People that don't know how to read English or decide to be dumb or don't know how to read past a first sentence because they're an idiot, they just stop there. Because if you read the second sentence, it then says that only the days, though, in which there's a governmental shutdown and the business shutdown, do you get to include it. Now, the other way you get to qualify is if there was a decline in gross receipts. Again, both things don't need to happen. Now, by reduction in gross receipts to be a qualifier, then the gross receipts need to be down 50%, at least 50% in any quarter in 2020 compared to the same quarter in 2019. Now, it's only a 20% decrease that's required in 21. You're still comparing that quarter in 21 to the correlating quarter in 2019 to determine if there's at least a 20% decrease. Now, some very complicated rules, but quite simply in 2020, if an employer qualifies in a quarter, they automatically qualify in the next quarter, and they continue to qualify until their gross receipts are more than 80% of a correlating quarter in that prior year, 2019, and then that would be the last quarter in which they qualify. In 21, there's an alternative method, unlike 2020, and that is if the quarter in which the employer is looking at, if they are not down at least 20% in that quarter compared to the same quarter in 19, but they are down at least 20% in the immediate preceding quarter compared to that same quarter in 2019, then they can qualify. Now, the only way to get ERC is in today's environment is filing a Form 941X. You can either claim a credit carryover or a refund. Now, regardless, you do need to report this on a 941. So there are those that filed a Form 7200, got the credit in advance while you were able to do that, which is during 20 and 21, but then never reported the advanced tax credit that they got with Form 7200, never reported on Form 941. So we are seeing that IRS is sending out letters saying, hey, we gave you some money. We have not seen it reported on your 941. Well, then you would need to report it on a 941X. So there's a recap for you. How long do we have to file? Well, quite interesting here. When we're talking about payroll forms, and you will find this on page 6 of the instructions of Form 941X, the most recent ones. And in the section that's titled, is there a deadline to filing 941X? Clearly, the IRS indicates that for any quarter in a given year, that Form 941, the statute of limitations starts to run on April 15th of the year in which follows the correlating year in which the Form 941s are filed for. What's that really mean in English? What that means is that in 2020, even though those Form 941s are due by the end of the month following the quarter in which Form 941 covers, so there's technically 4 different due dates to filing Form 941 in any given year. But the IRS makes it clear that the statute of limitations, though, for filing a Form 941X doesn't start until April 15th. So for 2020, that statute of limitations started to run April 15th of 21. We have 3 years to file for refund. That means that for any quarter in 2020, we have until April 15th of 24 to file a Form 941X. Then for 21, you guessed it, the April 15th of 22 is when the statute starts. 3 years from there, that puts it to April 15th of 2025. Now, can you check on the status of your Form 941X? Well, the short answer is you can call the IRS to check and see if your Form 941X is done, but they don't have the ability to give you, quote unquote, a status. Status as in, oh, we see that we received it, or we're working on it, or, oh, I think they're going to have some questions. What the IRS is able to see in the system is it's done and a refund is coming. So I get it, after 9 to 12 months, you may want to call. Well, there's the phone number you can call, which is different than their stand-in number. Hit press 3, employment tax. Now, if you do happen to speak Spanish, I've had some friends, clients, fans, friends of the channel that have said, because they speak Spanish, that if they choose the Spanish option when calling the IRS, that the wait time is significantly less, just as a side note. So you can call, but don't be disappointed if you call and they say, well, we don't show anything in the system. Now, when do you report COVID tax credits? Well, if we look to IRS Notice 21-49, pages 24 and 25, what the IRS indicates is that the tracing rules come into play, which means this. No matter when you file for Form 941 ERC, if it's related to 2020, the IRS is expecting that you amend your 2020 tax return, reduce down the wage deduction by the amount of the credit, and then you will owe more tax. If it's any credit in 21, then you're amending 21. I understand there's cash basis rules. What that means is typically you don't recognize something until you receive it in terms of income or an adjustment like this. IRS is indicating that the tracing rules come into play. With that being said, if you filed in 21 for 20, if you filed in 22, you filed in 23, you filed in 24, et cetera, et cetera, et cetera, none of that's going to matter, because whatever year that credit is applicable to is going to be the year in which the IRS would expect an amended return to be filed. Now, where do we report this? Well, you report it as a reduction in wages. Take note that when you have a reduction in wages, reducing down the deduction, well, then that's going to increase your net income. Of course, you're going to owe income tax on it. But with that, it does increase your qualified business income. So potentially you want to take into account that you could be looking at a larger qualified business income deduction. Now, you are reducing down QBI wages when you reduce down your wages for ERC. Now, let's do a quick recap. I had told you last week that the IRS had a nationwide live seminar. It lasted 1 hour. What they went through was talking through the recent pause that they put on processing ERC claims. Then they also went through the withdrawal procedures as it relates to those wishing to go, you know what, I don't think I want to try and get ERC. I want a do-over, so to speak. I want to cancel this. So they came up with some easy ways to go about that. And so with that, I'm now going to cover what it is that they went through the seminar. Also, this is all available on their website. So the IRS did announce on September 14th that there will be a delay for any ERC claims received between September 15th of 2023 and 12/31 of 23. The IRS has made it clear, not only in their announcement, also in that webinar, that this does not at all mean that they're stopping processing on ERC claims. Any ERC claims received before September 15th will continue to be processed. Any claims received during that time period through the end of the year, the IRS will resume processing those claims in 2024. Also, the IRS was asked specifically, and they answered specifically, that their delay in processing does not change the statute of limitations in filing Form 941X, because an employer can still file. In fact, the IRS very much was encouraging that any employers that qualify properly, they should absolutely file and not wait. So if everybody will make sure that they're on mute, Coop, do a quick check, make sure everybody's on mute for me. So IRS basically was saying, yeah, we're putting stuff on hold. It's on the inside. But what was interesting is that they indicated that there was, in about a 2-week period, so it must have been starting right about September 14th, I'm sorry, the first part of September of 23. And I don't remember the percentage that they said, but it was an alarming, massive influx of ERC claims. And with that, very much a suspicion of fraud related to this. And so they thought, you know what, we really just need to do a little bit of a pause here and sort through these things a little more carefully. So with that being said, it's all on their side of things, but these still will be processed. So even if they don't process your return before April 15th of 24, let's say for 2020, that doesn't matter. Those deadlines that we went over is the deadline to submit this. So the IRS did announce the withdrawal process, and I did just release an article on this morning. It's now on my website. There's a page about the ERC withdrawal. And with that, what the IRS has put together is very much a straightforward, simple, streamlined process to withdraw the ERC claim. I would say this, I wish that they would have had this process for actually making the claim for ERC. It might have actually helped them more than it helped the business owner. But all that being said, with this, it's very specific who can qualify to be able to actually file this withdrawal of the Form 941X. So this would be somebody that, of course, has already filed Form 941X or a similar form. This is also somebody that on that Form 941X, it was only to claim ERC, meaning 941X didn't include any other changes related to any other matters. Also, if there's a withdrawal, it's to withdraw the entire amount of the claim. This is not an ability to withdraw a portion of the claim. Now, it is quarter by quarter. So if somebody has submitted multiple quarters and they want to withdraw one, well, real simple. You just withdraw on the one quarter with that one Form 941X. This also needs to be somebody that's not been paid that ERC claim, or if they have the check, it's one that has not deposited or cashed that refund check. So if somebody, and the IRS confirmed this in the seminar, if somebody has filed Form 941X, they got the refund, they did cash the check, and now they want to withdraw their claim, what they do is the normal procedure, which is this. They have to file another Form 941X or the like, and that Form 941X would be to amend the original or first Form 941X. And the columns to say what was reported on the original Form 941 would actually be the amounts that were on the first or original Form 941X. And then the corrected amounts would be to then correct it to 0, which would result in a Form 941X being filed where there would be money due because they already got it. So let me back up just to say this. This is somebody that's already filed 941X. They don't have any other filing on that Form 941X except for ERC. They want to withdraw the entire amount of ERC for that quarter, and they've not been paid the ERC, or they've not refunded or cashed the refund check. So how does somebody go about it? How do you withdraw the claim? Now, the IRS has these same examples, but when you're looking at this, you're looking at a very simple procedure, and then depending on what circumstances you're in determines how it is that you then get this to the IRS. And so I think it might be easier for us to actually just get into the procedures. Now, IRS has put out something called an ERC checklist. Would have been great maybe to have that sooner. I don't say it sarcastically, just saying it as a fact. But on that IRS website, where the IRS talks about the withdrawal, they have this checklist that an employer could go back through. So if you have somebody now that's maybe not sure, they can go through the checklist, and it's there to aid them in determining, well, even though you filed for it, did you really qualify for this? And then making a decision if there's going to be a withdrawal. So with this, there's 3 scenarios that somebody would be in to then determine how they are going to get this to the IRS. Now, I'm going to skip ahead a few slides, and then I'm going to come back to this slide. So I'm going to skip ahead to this slide because here, what we've got is the simple procedure. You take the Form 941X that was filed, right? So somebody already filed this with the IRS. You're going to take that, a copy of it, you're going to write withdrawn on the left margin, and on the right margin, you're going to put the name of the authorized signer, their title, they're going to sign it, and they're putting the date that they're signing it. Voila, that's it. Now, in one of those 3 scenarios determines how it is that you get to the IRS. So I'm going to go back a few slides here. And so in the first scenario, this is somebody that has not received a refund and hasn't received the refund check, and they haven't received notice of IRS audit, meaning they handed in the Form 941X, but they hadn't heard boo, right? That's scenario 1, or section A. Then section B, as they call it, or scenario 2, is then if somebody has received an audit notification, and that would then be somebody that clearly is probably now definitely double checking on whether or not they should have filed for this. But nonetheless, the second scenario is somebody that has received an audit notification related to ERC, that is. And then the third scenario is somebody that's received the refund check, but hasn't cashed or deposited. And that sounds like maybe silly, but I think that exists more often than many are aware of, because people get this check, now they're staring it down and they're like, wow, do I really feel like I qualified or not? So that is a real circumstance. So let's go to the first scenario here, section A, as they call it. So you have filed a 941, but you hadn't heard boo, right? No letter, no check, no nothing. Well, then what you're doing is that 941X that has withdrawn, the name, the title, signed, and the date, you're going to fax that to the IRS. And I've listed the number here, which is also on their website. Now, the IRS indicated that this fax line is only for withdrawing an ERC claim. They will not accept or even acknowledge you filing anything else with this fax number. So that means if you're filing an original Form 941X, you would not send it to this number. The IRS will not forward it on. They will do nothing with it other than, I believe, just destroy it, but they will not do anything with it. So this is only to file a withdrawal of that Form 941X. So pretty simple. Now, if somebody has received notice that their claim is being audited, well, they're going to now fax or mail The auditor, that Form 941X that has withdrawn written on it with the name, title, signature, and date. Now, if an exact examiner has not been assigned, then they indicate you will send it to the office in which the letter came from, and you will either fax it or mail it. Now, the third scenario is somebody that's got that hot check in their hand, so to speak, not hot as in it's going to bounce, but hot as in what do I do with this? But if somebody has a physical check in hand, they haven't cashed it or deposited, the IRS wants them to write void in the endorsement section on the back and then put a note on the check that says ERC withdrawn, brief explanation of the reasoning. I would assume a brief explanation would be, I'm withdrawing ERC. I changed my mind. I mean, it's just brief because you're just writing it on the check. But you will send that Form 941X with that check to this address, and you will only send it to this address. You will not send it where you send Form 941X. You'll send that with the IRS, and it will not be stapled, it won't be bent, and you won't paper clip it. So they want that voided check to just be voided, not ripped in half, but just simply sent with no attachment to it. They do definitely recommend that you track that package to confirm delivery. Then what happens? The IRS said, well, you need to wait for your acceptance letter. The other thing the IRS indicated is that this is not accepted on the date that you file, fax, or mail it. This is only going to be effective the date that they accept it. The IRS is reserving the right that if they believe you filed fraudulently, that they will investigate it. So you want to get it in, and if you're now waiting to know when it's effective, you're going to receive a letter indicating that to you. I did want to note too just a couple of things before we go to the next slide as it relates to the statute of limitations. And this is in my regular seminar, but I'm just mentioning it here. So it's nothing new. But it's a 3-year statute for the IRS to audit something, and it's typically 3 years from a due date. But what I want you to note is that with the ERC claim, which is not any different than anything else, but the date in which somebody files for ERC claim, the IRS has 3 years from that date to audit that claim. Also, that's 3 years, but also for third and fourth quarter of 2021. IRS Notice 21-49 indicates that there will be a 5-year statute on any ERC claims in third and fourth quarter of 21, and that's 5 years from the date in which that Form 941X is filed. So IRS broke their silence, and what do I mean by that? Well, the last thing that they came out with of any kind of official language related to ERC was in about November of 2021. It was IRS Notice 21-65. They came out with nothing new in 22 and nothing new until this came out, I think, around August. And part of nothing new coming out was there just wasn't anything new, but this isn't new. This isn't new information. This isn't the IRS changing their mind. This was to be a further clarification. Remember, I told you earlier, there are people that are advising people on ERC that don't know how to read English. They're an idiot, and they're doing much wrongdoing very much on purpose, or they're so dumb they don't even know that they're doing it on purpose, or they've learned from idiots, they've learned from scamsters, and so they don't know any better because they were selling something the other day, manure to farmers, and now they're selling ERC credits. So we know that there's a lot of bad actors out there. So one of the ways that these shucksters out there that need to get a punch straight in the face and sent straight to jail with no breakfast, lunch, or dinner for the next 10 years is taking advantage of what the IRS indicated in IRS Memo 21-20, that if an employer's supplier is down and they are not able to get critical supplies, that leads to that employer shutting down, and that employer was relying on those critical supplies and that supplier was shut down due to governmental order, well, then that business would qualify. And for some reason, business owners, when they're reading anything that the IRS produces, somehow their eyes don't know how to read anymore, and they're completely confused and they become an idiot. So multimillionaires that know how to make money hand over fist all of a sudden don't know how to read black and white English. And what they want to believe is the bank robber that told them they have the code to the back door, and all they have to do is, after that bank robber enters the code, this business owner, this employer, gets to walk in and empty the till. And the business owner all of a sudden doesn't think that there's anything wrong with it, even though it's 2 a.m. and clearly they're taking money that's not theirs because a bank robber told them they could do it. That's what they've done here, and that's why the IRS has put things on processing. And we know it happens every day. The ones that get angry in my emails, or I should say in my videos, you know who you are. I doubt you're on this seminar, but you're the shuckster. You're the criminal. With that being said, I was so glad this memo came out. I wish it would have come out a year earlier. Now, we have 5 scenarios where the IRS basically is saying, here's a set of circumstances with an employer and a supplier. And in scenario 1, they go in great detail. It still doesn't result in the employer qualifying. Same thing in scenario 2. In scenario 3, there is a window in which the employer qualifies, and they verify what I told you earlier, that there was a governmental order, and then therefore the exact days of that governmental order, they qualified. But then once the governmental order was lifted, they don't continue to qualify. Same thing in scenario 5 and scenario 4 and 5. But what I've put together here is a recap for you. So here in Oklahoma, we use a saying of, this is harder to do than the camel going through an eye of the needle, coming from, I think, the Old Testament. But when we're now looking at a business qualifying because of their supplier, this is somebody that, Cooper, there's somebody that needs to be admitted. Can you admit them, please? What we're looking at here is that we have an employer, that they do have a supplier that is somehow affected. And that's where idiots become idiots. And then people become idiots by believing idiots. And it's just ridiculous that people think all the different ways that they qualify. So as you can tell, it's so frustrating, I can't help myself. But here we go. You ready for this? So if the business, the employer that is, didn't shut down, they don't qualify, period, the end. No matter what the additional circumstances are, they do not qualify. Somebody scratching their head should no longer scratch your head, because it's just that simple. Period, the end. If you have a business that didn't shut down, partial or full, they are out, unless their gross receipts are down. So let's say that we have an employer and they did shut down partial or full. Okay. Well, was that due to their governmental order? No. Okay, well, then they're not going to qualify just because there was a delay or something was going on in their community. If there was not an official governmental order, that employer is not going to qualify, even though they may have shut down partially or full. But let's say they go, oh, there's a supplier, though, that we work with, and we were relying on them, and they had a governmental shutdown. Okay, well, here's the thing. Was the shutdown due to a lack of critical supplies? Not, well, we just decided to shut down. Was there critical supplies? See, the IRS provides an example in IRS Notice 21-20 of an auto body shop, and they couldn't get motors from a supplier, and that supplier was shut down due to governmental order, and that governmental order directly affected them being able to provide motors. Therefore, that auto shop had to partially shut down. And the days that they were shut down, those are the days that they qualify. See, an idiot thinks that the days in which a supplier is shut down due to governmental order somehow allows that employer to qualify all those days. And that's just somebody that's dumb and is selling you land in the middle of Atlantic Ocean and probably thinks there's actually land out there to sell. But if it's not due to critical supplies being unable to be obtained, you're out, okay? So it can't be, well, I couldn't get gauze, okay? That's not critical supplies. Now, it needs to be an existing order, not, oh yeah, I use that supplier. I use them all the time. I don't have an order with them. Well, if you don't have an order with them, you're out. It does need to be a supplier that in fact was under a governmental order. So if that supplier wasn't under a governmental order, then you don't qualify. And it's not good enough to say, well, they told me they were. See, when the IRS comes to question it, if they do, they want to see the governmental order. The excuse is not, well, it's hard, I couldn't find it. How do you find these things? It is not hard. It's called Google, and your government has it readily available to the public, a governmental order that's going to be signed that made it a governmental order. It's total hogwash that people say it's so hard to find a governmental order. Well, it's probably because it doesn't exist. So the IRS, even in their examples, when somebody says, well, I was told that supplier was under governmental order. Well, if you have no proof of it, then it doesn't count. So they had to have been fact shut down. But IRS even goes a step further to say, but the shutdown of the supplier, that had to have a direct effect in not supplying the critical supplies that were on order, that those critical supplies, by not being received, caused that business, that employer, to shut down. Now, also, if they could get, that employer could get the critical supplies somewhere else, then it doesn't matter that they have a supplier that was shut down at all. So IRS even gives an example that somebody had to pay an exorbitant amount of more money to get the supplies. That doesn't matter. So a shipping delay, the IRS has made clear, does not qualify. You have to have governmental orders involved. You got to have copies of them. It has to be critical, has to be an order that was already on file, has to be an order that by not getting it caused you to shut down and you couldn't get it elsewhere. So the IRS did go through this briefly in their seminar, but basically by briefly going through it, mentioning the memo, they did also say it is very, very difficult that someone would be able to qualify for the employer's supplier causing them to close down. Doesn't mean it's impossible. Now, you have to look at the definition of an employer. So I've had some idiot attorneys that have tried to tell me that the courts being closed caused them to qualify for ERC. And I said, how dumb are you? That is not a supplier. And they want to try and argue a supplier, and they're with somebody that guaranteed it and give them a legal notice. I said, well, go ahead and do it and you're fired. I don't even want to know you because you're now a criminal. Okay. You're fired, you're a criminal, and you're breaking the law. So luckily, I had a couple of idiots that are no longer idiots because they didn't do it. And I even told them, you're being an idiot. Stop being an idiot, because you're an idiot if you think that the court is a supplier. So many different ways. Somebody came up with a wink, wink, smirk, smirk, and they said, well, the bank robber told me that it was okay to come in at 2 a.m. and open up the till and pull the money out. So what am I supposed to do? They told me, I mean, they were in a mask. I've never even seen them. I didn't know who they were, but they sounded good on the phone. They told me that they're out of New York or California, and they do this all the time, and they've got big time lawyers. So gee golly, I don't know anything because I'm a business owner that runs a business, has a payroll, helps vendors and customers and makes a living and saves for retirement. But by golly, I'm just going to believe anybody that calls me and says that there's free money on the table. Why am I going through this? Because those people, those employers that got ERC due to a supplier should be the first ones to re-examine whether or not they qualify for ERC and determine if they should withdraw their claim or pay it back. Here's the other thing I want you to note is that the IRS in using AI is not, it's not that difficult. So let's just take the state of Oklahoma. We only had 21 days in which all businesses were to close down other than essential businesses. Now, there was a period of time following that where restaurants had only could open to a certain percentage. Okay. With that being said, someone needs to mute themselves. Cooper, mute them. With this being said, when you are now looking at whether or not you qualify, if it's due to supplier and you don't have that governmental order of that supplier, then you better fly to where that supplier is and get it if you cannot find it on Google, because we know Google's very limiting. It only has information that's in your area. It's really hard to find stuff on Google. Google's not helpful ever. All right. I'm being very I'm being very sarcastic, right? There's no way you can't find a governmental order. It's not even possible. And if you did get it to a supplier, then you need to contact a supplier if you don't have documentation from them to show that what they were supplying to you was in fact on order, and what they were supplying to you was critical, and how much of it. And you need to show the days that you were shut down. So it would be, in my mind, permissible to go back and go, okay, I did claim this. It was due to the supplier. I was trusting somebody. I didn't mean to be an idiot, but you're right. I realized I was talking to a bank robber at 2 a.m. And you're right. I went in and emptied the till. And now I'm realizing, gee golly, that might not be right. Well, then what you do is you go back to the bank and you say, hey, did you know this bank robber? And did you allow him to have the code? And was that cool that I took money out of the till? Well, you don't have to go to the bank, but you can go to the supplier and make sure that you have the facts and circumstances. Know this, the IRS, and I think rightfully so, is not going to mess around with this, and they are upping. So with that, if you're on this, you're good to go. But here's what I want you to know. This is being recorded, and I'm going to put it out there for people to watch. So this is also for the shuckster that's watching this, and hopefully he's getting very angry, or maybe worried, or maybe they're running from the law currently, wearing a fake mustache and a wig because they know they're getting coming after. All right, last subject before we go into the Q&A section. Looks like we have 21 questions. If you came on a little late, go ahead and put your questions in the comments. I'm not going to answer them in order of their being put in the comments. I'm going to answer them first on what seems to be general. You won't be able to provide me specifics about your customer. This is all being recorded, but nonetheless, you can put your questions in the comments. IRS penalties. So this right here is not anything that the IRS has put out specifically related to ERC. What this is just a program that exists with the IRS, and it's the first time abatement program. And so with this, the criteria is that you would have an employer that's in good tax compliance. So we're talking about the circumstances that somebody got the ERC, they have the credit, now they need to go back and reduce down the wages in the year in which the wages were deducted related to the credit that was based on those wages. So if you're going back to 2020 and you're amending that return, reducing the wages, it's increasing the net income. Therefore, it would result most likely in there being tax due. That tax being something that's now getting paid after the due date will have penalties on it. So this circumstance of that business filing the income tax return, which ultimately is also down at the individual level, can file for this. So they have to have been in the past 3 years, not received a penalty. They've not had a penalty waived. They're in good standing. So just as the program states, it's a first-time abate relief program. So with this, most likely, many will be taking advantage of this. There's actually a form 843, in which the IRS allows for you to even complete and send in. You can also just send a letter using the language that is on there. Now, if you've received a notice from the IRS saying they didn't grant you that request, you can appeal it by better explaining the circumstances, because really what it comes down to is, other than being in good standing, not having penalties waived previously, well, it needs to be, though, that you had reasonableness, as in, well, the ERC claim didn't exist. I wasn't aware of it. There was no willful neglect for me not to pay my tax. I just wasn't aware of a credit. When I got the credit, then I amended my return. I did pay the tax. So there was no willful neglect, meaning I didn't do this on purpose in terms of underpaying tax. And it's reasonable that I should have the penalties waived on that. So we're going to get into Q&A. Just as a reminder, today is sponsored by ADP. I do have a free tax planning seminar sponsored by ADP coming up right after the Thanksgiving holiday that you can sign up for. Remember, with ADP, you can send them to my team, even if you're a tax advisor, and get the same benefits. And with that, you can get 3 months free on any payroll services, plus a discount after that. Now, I don't know if Erica and Haley were having a little technical difficulties. Erica and Haley, are you able to unmute and say hi to everybody?
Yeah, hi everyone.
Hey.
It's Erica. Haley is working with a client right now, but I'm here and it's great to be here and get to hear everyone's questions.
All right. Well, thanks for being here and thanks for sponsoring today and bringing this good information to everybody. So we sure appreciate you. Well, we know this. Check out my YouTube channel. And thank you for being here today. I am going to go ahead and continue to record. I'm going to try something here to share my screen so that it isn't everybody getting recorded. So I'm going to pause the recording here real quick, and we're going to take a 5-minute break. And then when I come back, I'll start looking in the chat and I'll start answering the questions. And again, you should stick around, because if I come to your question, you're not here, may not answer it, especially if I'm wanting some additional information. Don't give me a bunch of details, because I won't have time to go through it. I'm not going to pull my calculator out to do calculations for you. You need to have general questions. And so with that, I'm pretty excited to go through and see what questions y'all have. All right, I'll see you back here in about 5 minutes. So we're going to come back to the Q&A section here. I've got Erica and Haley with ADP on the JJ the CPA team. And tell us about the special we've got going, you all have going, related to the U.S. Master Tax Guide that people can take advantage of.
Yeah, so we right now have a promotion going on for a free master tax guide. Our tax guide is typically ran for roughly around like $10,000, or that's what it's valued at, but we're giving it to you for free. Today is, however, the last day to sign up. So if you are interested, we will put the registration link in the chat. And then you will also have to enter my email address. And once you register, you will have access to the online searchable live version, but you will also have access to like the hard copy. So I'll be able to email you and get the address to send that master tax guide to. JJ, you're muted.
Thank you. Yeah, I've got it, linked as you indicated, but you're putting it in there. Will you put in the chat what your email address? Maybe you already did.
Yeah, I can do that right now.
Yeah. So that's where you can get it right off that page. And then the other thing is that being a part of ADP down here in the bottom right, ADP, you have a team of 385 professionals. I've got to know a couple of them, and they, being a part of ADP, will help businesses determine if they qualify and properly, and then helping them on that. Briefly with that, just you don't have to tell everybody the process on the ERC, but if somebody has that, they're just contacting you, and then where do they go from there?
We either get with, if JJ wants to help, then JJ, or we get in contact with your CPA, and we have them fill out a survey for you. We do everything on the back end, and we reach out back to you once ADP and our tax team has reviewed everything. So honestly, it's a really super quick process. You guys pretty hands off on your end. And I mean, that's really about it. We have a whole tax department here, separate from like the payroll. It's very, specific only to tax credits. So they're all professionals. They all, know what they're doing and are able to help.
Yeah. Well, I know they're on advisory roles somewhat with the IRS, gotten to know the two top leads on the ERC, and couple of things on that, right? They don't have to even be a client of ADP for ADP to do a free assessment of whether or not they qualify.
No.
Yeah, which is great. The other thing is that because you signed up for the seminar, you should get a link here. I think it's going to be in 48 hours. Gives me enough time to get everything uploaded. But you're going to get a link to then come back and rewatch it. So it'll be linked here, and I'll have the PowerPoint along with it. Also linked here where you can contact Erica or Haley and get that process going on with ADP. So really appreciate that. We're going to now jump into some of the Q&A. But since you're on the live production, y'all, you're seeing a little bit of behind the scenes, but I'm going to hit pause real quick here. All right, my great friend, J Mac. Great to see you, my friend. Let's see, Rosa, you're muted. Oh, okay. Maria says, can two S Corp owners, employees, 50% ownership, each include their wages in calculation? So if the two S Corp owners are not related, so they're not family, then the answer is yes, because it's more than 50% ownership that causes somebody to not qualify. So this could either be in a partnership, an S Corp, or a C Corp. And so if you have two owners and they're each 50%, excuse me, and the IRS even has an example of that directly there. So great to see you, EH. Let's see, iPhone says, oh, it's Joseph. How do I get my payment from the refund on my client return? So, well, if we're talking, obviously we're talking ERC. If there's not been a payment yet from the refund, then you're contacting the IRS. Now it's 9 to 12 months for them to process. You can call the number that I provided to check on it, or for your client. Now, how do I get my payment from a refund on my client return? So if somehow you were waiting to get paid until your client got paid, if that's what you're asking, then of course, IRS won't help with that. So Joseph, if you had a different question than what I've answered there, then you can put that in there later. I've got JR, and says, I filed ERC last June, not a word from the government. Is there a way to track or estimate when the refund will come? Well, I hate to hear that for sure. That has definitely been a much longer period of time than really you should be having to wait. So here's what I would do is contact the IRS, that number that I provided. If we're talking June of 22, and now we're in obviously November of 23, if you haven't received it, I would go ahead and call and just make sure that they don't go, oh yeah, we already processed that back in such and such, and we mailed a check. With that being said, if they have no record of it, then the IRS, I dare say, won't have a record of it. And so I would refile Form 941X if the IRS does not show they have it in their system. And when you file the Form 941X, to play it safe, I think you could put if it was me, my client, I would just write in red at the very top, just something small that just says, originally submitted on this date, never received a refund, called IRS, and no record of it, so I'm resubmitting it. And the reason to put a little note on there is that if it just happens to be that all of a sudden now they find the original one, there's not going to be then any thinking that you're trying to put in for it again. You're doing it as a replacement. So sorry to hear that, but that's, if you're a client of mine, that's how we'd go about it. So we've got Zoom at Chip. If an employee consistently works 8 hours a day, 40 hours a week, but starts in the middle of 1 month and ends later in the middle of the last month, is the person considered full-time or part-time in the first and last month? So good question there. Let's go ahead in my seminar here. Let's pull up the employer size. So this is going to be in section 7. And we're going to look at just exactly what the IRS indicates. And I know that will answer our question here. So with this, let's see. Got to look over my microphone here. So full-time employee means any employee with respect to any calendar month in 2019 had an average of at least 30 hours of service per week, or 130 hours of service in the month. So 130 hours of service in a month treated as the monthly equivalent, or at least 30 hours of service per week. And there's a code section. And the reason I just wanted to read that specifically is I get your question. You're going, okay, well, I mean, this is saying per week. We have also something per month. Well, it says or there. So what I would indicate here is that when you're doing the calculation, and in my seminar, I include the Excel spreadsheet, you're literally listing it for the month. And so were they full-time in that month? It's either yes or no in that month. There's nothing that bleeds over. So the average of 30 hours a week would be assuming they worked all month. So based on what I am seeing in your question here, I would go with the 130-hour rule for that month. So in any specific month that you're looking at, did they work 130 hours? And if so, then they would be considered full-time. So I think that pretty concretely puts you in a good position to know that you're making a good decision based on what you're indicating there. And then remember, it doesn't include full-time equivalents. All right, Melissa says, do you think the IRS will push back the statute of limitations for the 2020 ERC quarters because of the current moratorium? So good question on that. The IRS was specifically asked that and specifically addressed it in their IRS webinar. And in fact, I included it in my article that I released today. But the answer is no. And the reasoning for it is, the IRS explained, is that there is no delay for an employer to put in for ERC. So the IRS is not accepting ERC claims. The IRS is just simply at their office, any new claims during that moratorium is just setting them aside, basically. But employers can still put it in. And remember, the IRS doesn't have to process it before the statute of limitation runs on April 15th of 24 for 2020. It just has to be submitted by then. So with that, they said, no, the statute would not be extended. Now, they did reserve, which I don't take it at all that it's going to happen. I think they were very respectful, the representatives who were pretty high up in the IRS, but I think they were respectful to say, there's no known, movement towards that. That doesn't seem probable. They didn't say it was impossible, but I think the reality here is that the IRS would not want to change the statute. But then the last thing that they indicated, and I'll mention to you, is the IRS cannot change statute of limitations. That's like a governmental law on statute of limitations. Now, IRS can kind of do whatever they want if they deem that it's important or needed or applicable. But I'm just saying that's what they said. They said that this is statute of limitations. That's the law, and that's not something that they didn't believe, at least in the seminar, that would be moved. So I would assume no, there's not going to be any change to that statute limitation. So Mario says, a computer I'm using does not have a camera or microphone for follow-up. So if you want to email your question, you should just be able to still put it in the chat. If you're more saying that, maybe because you're not going to be here, maybe when your question's answered, I'm not sure. But Mario, you should be able to put that in the chat. Or if you want to email me the question, I can look for it. Let's see. Justin, my brother Justin, will you be offering more seminars later this year as you did in the prior couple? I have other commitments this week and don't want to miss the value you provide, so hoping you'll plan more year-end updates. Well, thank you, my friend. With that, yes, thanks for asking, and what a great way to plug my seminar. So in December, I've got 2 seminars that I'm putting together on the 7th and the 8th. And you can, in fact, sign up for those now. So if you go to the pictures on that page that you got the link to for the Zoom and the PowerPoint, it'll take you to Calendly, or I don't know, my calendar. And you'll be able to sign up for those now. And you should go ahead and sign up for those, Justin. You'd always get a good deal. But I am going to increase the price to the seminars. I put them at $47 because I announced it so late. I was trying to get people to come to the upcoming one. But then I'm going to probably go ahead and increase them here next week to what I normally charge. And then Justin, just as a side note, there is a state society, not in Oklahoma, that I will be soon exclusively providing all of JJ the CPA CPE through, which means that it will not require you to be there live. It will be that you can rewatch it, or it'll be a webcast and that you'll be able to earn CPE at. So I'm pretty excited about that. And next time we visit, which I know I owe you a call, I'll share more about that. All right, Cindy. Okay, just had a technical issue. Rosa, can you still send Form 941X for ERC during the moratorium? And yes, you absolutely can. Melissa looks like also attended the IRS webinar, and they did also confirm that. So they will not process it into their systems until 24, but you definitely can. I've got a direct message here from E. Let's see, I submitted a claim based on information from my accountant that we were eligible due to the mask mandate, social distancing, etc. This is in NYC. It now appears that this is not a mandated closure. We commenced business in February 2020, so qualify as recovery startup. So how do I retract the claim submitted and reapply, and what are the consequences? Well, what I would do is, Erica, are you calling me?
No, I'm not.
This is Joshua. All right, we're going to go ahead and continue here. So, E, the mask mandate's kind of a weird deal. So with the mask mandate, I'm going to be honest, there was a time I thought it qualified employers as well. This would be like during the mask mandate, like while businesses are closed, right? We're in a lot of time of uncertainty. And I don't know that the IRS, until IRS memo 2023-005, I don't think they addressed anything about a mask mandate that I ever could find. But in IRS, that memo they came out with this August, they did bring up in one of the examples, there was a mask mandate. So the mask mandate, because it affects your customer and it could affect your customer's decision on whether or not they want to come into your business, or maybe limits them getting out or whatever, what the IRS relies on is that from the get-go, an employer cannot qualify based on their customer being affected by the pandemic. So even if the customer was under governmental order and now an employer doesn't have a customer to work with because that customer's closed due to government order, IRS said that's never going to be a qualifier. So they put it in that category. More just to say, I think depending on where you go with this, that would be your reasoning, I believe, in terms of what would be reasonable if you're withdrawing this. So if you're providing an explanation, which we're going to continue talking through your very question here, but I would be putting that as the reasoning after reviewing IRS memo 2023-005, where it addresses factors related to the mask mandate. It's my opinion now that I wouldn't qualify for the quarter in which I have applied for. And the procedure you would go through is based on what you're saying, that you already got the check, is that you would file a Form 941X of the Form 941X that you previously filed. So you're filing an amended Form 941. So when you're doing that, as I indicated earlier, Form 941X, in the column that says, what's the original number, you're going to put the number that was on your 941X as the corrected amount. And then in the corrected column on your new Form 941X, you will put in, I would assume, 0, that then would lead to the adjustment, which then leads to line 27 being a positive number, which then means you would be paying an amount. Now, you would want to pay that amount with the Form 941X. You're going to get a notice probably fairly quickly of penalties and interest. And then you could request under the first time abatement program to request abatement of the penalties. And you could use as, in my opinion, reasonable cause is that it seemed reasonable and based on the information that you had. And this was a governmental ordered mask mandate. I would really drive home. It was governmental order mask mandate. But after reviewing the recent IRS notice memo 2023-005 that addresses the mask mandate, it appears that that may not be enough to qualify. Now, the reason I wanted to maybe pick apart is, and this isn't a one size fits all, but as it relates to social distancing, so you have to look at the governmental order to see, well, what did the social distancing require? So in a restaurant setting, let's say, if you have a restaurant and there's social distancing and it's only social distancing, then you may be kind of out of luck. But many times with restaurants, there was social distancing, but along in the governmental order would mandate that, let's say a restaurant as an example where I saw this, it indicated that they could only be at a certain capacity. And so if you've got a restaurant that can't be at full capacity, and most of these mandates were, 50% capacity, 60% capacity, 80% capacity limitation, I think those would qualify. I don't think there was any that would be less than a 80% max capacity. So if the social distancing encompassed a capacity restriction, that really could be enough to qualify. Now, the reason I can't just say unequivocally that that would be a qualifier is that every governmental order is different in terms of what businesses it actually applied to. And here's the more important part. Was your business basically complying? Were you, due to social distancing, unable to be at capacity? But here's the deal. If the if the governmental order just says social distancing is required with no capacity limitation, personally, I don't think that's enough, because businesses could solve social distancing by simply just limiting the number of customers that would go into the store. And so what I'm getting at is, if the governmental order also talks about capacity limitation, then that really might be enough. Now, I'm not trying to find a reason for someone to qualify. I'm just saying that you got to look at the governmental order. So the consequences is paying the tax, and then the penalties and interest, and going through the time of trying to request the abatement of penalty. So anyways, maybe also get a second opinion. I'm sure your accountant meant well. I told you there was a period of time that I thought mask mandate might lead to qualifying. Now, I never filed a 941X under that premise, and I didn't have any videos telling anybody they could. I'm just saying my personal issue on that. So hope that helps you out. All right, we got Ray. Ray, how you doing? Does that also include part-time employees? So Ray, if you're on, tell me further about your question here. You might be asking a question from somebody else's question, or maybe you're asking a question from when I was presenting. But Ray, are you with us? Ray Garcia?
Yes, I'm here.
Hey, Ray, how are you today?
Doing well. Thank you for asking.
So tell me further about your question, my friend.
Yeah, I just wanted to double check in terms of small business with part-time and full-time employees mixed. In terms of the qualifications for part-time employees for the ERTC program.
Gotcha. So stay unmuted in case I have another follow-up. And it's a great question. So I'm going to break it down. When we're looking at what the head count is to determine if an employer is a small employer or a large employer, we're looking at that head count in 2019, and we're only including full-time employees. Boop. We never have to look at that again. So when we're now looking at what employees, what wages get included in the calculation, like the actual calculation of the employee retention credit, in IRS Notice 21-20, in the section that talks about qualified wages and what wages get included, it's all employees. It doesn't matter if the employee is essential or not essential. It doesn't matter if they're part-time, full-time. It doesn't matter if they're seasonal or temporary, or even if they just worked one day. Long story short, if there were W-2 wages paid, that's what gets included. It never looks to the classification of what that employee might be, as in full-time, part-time, salary, non-salary, exempt, non-exempt, et cetera, et cetera, et cetera. So yes, part-time and full-time employees are included. And just one step further, it wouldn't matter if those employees were working for the company in 2019. Just one step further to say, whatever the qualifying period is, then what were the W-2 wages during that time period? Those get to be included. Now, of course, we know it's limited to $10,000 per employee during whatever qualified period it is. And we also know that if it's a small employer, then it will include all wages to the employees, whether they worked or not. If it's a large employer, then it will only include the employees that didn't work but got paid. So small, everybody's included. Large, only if they didn't work and got paid. But see, even with a large employer, they don't look to the classification of the employee. It includes part-time, full-time, et cetera. So great question on that. Anything else on that, Ray?
No, that was a great explanation. Thank you so much for your help, because
You bet.
it certainly will help this client.
Okay, perfect. Well, good deal. And, just as a side note to Ray and everybody, the IRS was very positive, as you would expect, on that webinar, and very encouraging that no one should be shying away from the ERC. And just like with Ray helping clients, we shouldn't feel bad still going and getting ERC. Now, I don't at all ever want to put the IRS in a position where it sounds like we're blaming them for anything, because we know that they were just in the same spot as all businesses with being closed and all of that. But just not having a lot of information from the IRS that was really able to be digested by the general public early on, I think has led to some of this confusion and late notice. In the Appropriations Act that came out December 27th of 2020, there was actually, and I may get the number wrong, but it seemed like it was like $83 million set aside for the IRS to use as an awareness campaign specifically to ERC. Maybe that got spent and I just didn't see it. They did put out FAQs, but the IRS memos that came out were, I think, written very well. They had great explanations, but just maybe not digestible to those that aren't tax professionals. So no criticism of the IRS, no reason to do that, other than to say, just like with Ray working with clients right now, not alone, because there just was not a lot of awareness out there. So again, the IRS, I think, is, now having to deal with a lot of issues. So with that, good luck to you on that. All right, we've got, let's see, Leslie, I think. How do you determine what time frame is the government partial or full suspension? So great question on that. At first is going to start with, when you look at that governmental order, what are the exact days? And when we look at IRS Notice 21-20, and we look at the section that talks about governmental orders, it does make it clear that there is a qualifier to the employer for the quarter in which there is a shutdown, in terms of, well, then that's the quarter in which they will file a Form 941X. But they further state that it will only be the exact days of the governmental order. But the second thing that has to happen is that the business does need to have shut down, partial or full. So they have to be under a governmental order, but then they also had to have actually shut down, partial or full. I know that that's where we get into big questions of what that really means. And there's no simple answer, but where a simple answer can start is, well, was your business affected? And if we can answer those questions without smirking, then we're probably coming up with a legitimate answer. But if it's, well, once a year I travel to Tennessee and I wasn't able to travel to Tennessee, even though I didn't have a plane, an airplane ticket to Tennessee. So wink, wink, ha, ha, I think I qualify. Well, I don't think Leslie or anybody else is doing that, especially that's attending today. But my point is Was the business affected? As in, did you shut down? Were you under a governmental order that said you needed to shut down in some way, shape, or form? And then did you actually shut down? And so a step further is then it would only be the days in which that business was actually shut down. Let's see, another question from Leslie. Do you file amended taxes even before you know if you get the credit? Well, such a quandary there. Great question. What's being asked here is, we know that when we file Form 941X, that's a payroll form, and we're going to get a refund related to payroll. That's not going to come immediately, of course. That's going to be a credit that in today's environment could be 6 to 9, maybe 12 months, just depending on a number of factors at the IRS. So when you look at IRS Notice 21-49, you look on pages 24 and 25, what it indicates is that when you have an ERC credit, you are needing to amend the return regardless, this is what they talk about, regardless of when you file or receive the credit. So what they're saying is that when you know that you have the credit, well, then that's the date that you would need to go and file an amended return. But then the quandary is, I've had a number of calls just from people that have taken my seminars, a lot of times back in 21 and 22, and they said, I've got a client that's getting a $700,000 ERC claim. And they say, it couldn't be more legitimate, feel very comfortable that they get this credit. It's huge. But, when they go amend their return, they're going to owe, a couple $100,000 in taxes, and they literally don't have it. They couldn't even go borrow it. So they said, what should we do? And I said, well, all we can tell our client is what the IRS says, unfortunately. And we can tell the client, all I can tell you is what the IRS says, which is you need to amend the return as soon as possible. And here's why. Why do we ever amend a return? Well, it's to pay the least amount of penalties and interest and tax from the date in which we file an amended return. And here's the thing, if you're not a tax professional, you're probably going to misunderstand what I'm getting ready to say. And so if you find yourself misunderstanding it, then I want you to just say right now, well, then I misunderstood what JJ was saying. But the IRS in black and white says, you're not required to file an amended return. Now pause, because none of you are an idiot and you know how to keep listening. What the IRS says is you're not required to file an amended return if you believe at the time that you filed it to be true and correct. However, what the IRS makes clear is you should file an amended return because you owe the additional tax. And the sooner you can pay the tax, then you reduce down the assessment of penalties and interest. And if you get audited and you knew you should have amended the return, well, then maybe you're going to get in trouble. But when we just look at one sentence at a time, then we always get ourselves in trouble and easily get misunderstood. So I've never had a client that I've said, well, the IRS doesn't require you to amend a return. If we find a return needs to be amended, then we're amending the return. But your question here is, do we wait until we get the credit? And all I'm saying is the IRS is very robotic on this, and they're going, well, we're not basing it on when you get the credit. We're basing it on the fact that you got one and it applies to that year. Now, I know tax professionals are going to go with cash basis rules, regardless of reading the tracing rules that the IRS spelled out. And they said, I'm going to argue it. If my client gets audited, we will have reported a reduction in wages, and we're going to argue it to the IRS that cash basis rules should have been followed due to the unreasonable amount of time that the IRS was taking to even actually pay out the refund. So I don't have any opinion on that position. I'm just saying I think tax advisors are doing that. Now, I'm in a fortunate position that all of my clients, we didn't have to file a 941X. I knew what the ERC was when it came out, and we got it on the originally filed Form 941. And therefore, we were already able to report it. And we were getting it early enough that my clients were not having to wait hardly long at all to get their refunds because it was well before the influx. And I more just say that is that I feel fellow tax pros and small businesses owners pain on that. I've not experienced the pain directly, but I feel your pain on that. So here's a reality. I know that for the client or the tax pro that I was talking about, and their client was owing 700 grand, they're going to have to then write a couple $100,000 check and taxes to the IRS. They said, okay, I'm going to just tell them what the requirement is. And of course, we know the client will say, well, what do you think I should do? And it's like, gosh, I mean, all I can tell you is what the IRS would say. And then whatever decision you make, I'm just going to tell you what the consequence is. But then there's just also reality. So long story short, then what I think we rely on is that first penalty, the first penalty abatement program related to the penalty. So it's just stuck. I mean, if somebody waits to get the money, like this client, not my client, my consult's client, to get 700 grand, to have the couple $100,000 that they paid to the IRS, well, that seems like reasonable cause. And I told that tax advisor, I would even argue to the IRS that you don't owe any penalties and interest past even the date that the 941X was filed, because the only reason the client didn't have the money is that the IRS delayed in sending the money, and it would be an undue hardship and against the Bill of Rights of a taxpayer to then be penalized because of the delay of the IRS, and probably would be a pretty good argument. Just making a factual argument, don't need to make an emotional one to the IRS. All right, so good question on that. We got Maria. Can I still access a previous ERC CPE years that I took last year, or should I take a new course of yours? Well, I sure appreciate you asking. So Maria, I don't recall how far back, but I think that anybody that's bought my course going back a while, it's still the same page. So when anybody bought the seminar, it made pretty clear that you were only going to get the seminar access for 6 months. But truth be told, I just left it up and I just kept updating it and updating it and updating it. So more to say this, if the page that you have is no longer available, that actually means that it has old information and there were enough changes that I needed to take away that old page. And so then the answer would be, you would want to go ahead and buy the seminar again, which I appreciate. So more just to say, double check, feel free to email us, Maria, and I can have Amanda double check. And if you can tell us when you bought the seminar, because if you bought the seminar in the time period that you should have access to the website, even though it's expired from what I originally said, we're happy to send it to you. It's just that there was enough changes. So when you took it, it was one video for probably 3 hours. Now it's 21 videos over 8 hours. It was probably a 200-page PowerPoint. Now it's 300-page. So it has changed. So thank you for that. And I sure appreciate your business. Brady, can you give another example of how receiving PPP forgiveness affects the ERC, focusing on how we pick PPP dates and use other dates for ERC? Okay, I love this question, Brady, because this kind of gets into what accountants like to do, which is deal with numbers and deal with puzzles. And this one becomes a real puzzle. So I've got a whole section on the PPP interacting with the ERC in my seminar. So give me a second to get to that section here. Let's see, because what I'm going to do is I'm going to pull up a few things that I think will help us get through this answer. And I will say this, we are definitely able to strategize on this. I know that kind of more maybe from a tax pro side, we may be thinking, what I'm getting ready to tell you doesn't sound proper. But the thing to note is that the IRS has said that it's proper. And what is it that I'm talking about? Well, we know that we cannot take the same payroll on any two programs other than the tip credit. So if we used wages for PPP forgiveness, then we can't use it for ERC, right? That's where we start. So what happens though is we know that there's going to be an overlap. So when we look at a PPP forgiveness application, and here's the instructions from that forgiveness application, it's the same for all three versions of the PPP forgiveness application. But what they indicate is do not include wages that you used for ERC. And I know I'm just now repeating myself three different ways, but I'm more pointing out. Also, the IRS indicated this exact same thing. They said, if you have wages that qualify in the same time period for both ERC and PPP, you get to choose which program you want it to be used for. You just can't use it for both programs. So what this means is, and I think everybody knows me well enough that I don't get into giggling and getting goofy and talking with a smirk when I talk about ways to ensure you're doing something properly. So let me now bring up this example that I've included. So in this example, we have somebody that gets a PPP loan, and in my example, it's $100,000. So we know for PPP to be fully forgiven, 60% of it has to have been used for payroll. That means that 60,000 in my example needed to have been used for payroll. And if so, then they're on the track for full forgiveness. Now, that would assume that the remainder of that PPP loan was used for rent, utilities, and interest, or the other incidentals, depending on the year. So that would mean somebody could have as little as 60,000 in wages if they had 40,000 in rent, utilities, and interest, and still get full forgiveness. The reason that that's key is that when we now have an application that's been handed in, what we have to look at is what was actually reported on the application. Now, if you've been watching my channel all the way back to the beginning of time, which would have been 2018, but for most, the beginning would have been in 2020. You know that, and I caught a lot of flack for it until I was seen as a genius. And it was more just kind of by accident to be considered a genius on this one little tiny thing. I don't know I'm a genius on much, but it was on this one. But with the ERC, what I was telling people at the end of 2020 was hold off from filing PPP loan forgiveness. And people lost their minds because they're like, why would we hold off from filing PPP loan forgiveness? And I said, because we know the law is getting ready to possibly change related to ERC. So if you file for PPP forgiveness, you've locked in whatever you've reported to the SBA for PPP loan forgiveness purposes. And many got very excited because they just got to scratch off their list, and I get it. They got to scratch off their list or scratch off their client's to-do list that, we got our PPP loan forgiveness application. I got it fully forgiven, and they're feeling fat, dumb, and happy, and they should. Okay, great. Kick your feet up. Let's start watching Archie Bunker. Life's good, right? Well, then what happened when we got into 21? Well, we had PPP 2.0, and we now can take ERC, even if we got PPP. So for those, I know Tony D and Rob and Group 51 and a lot, they said, just toe the line. Just keep telling people what you think, because I think you're on the right road, because we knew that somebody had a long period of time, 10 months after the covered period ended, to put in for a PPP loan forgiveness application. So all I was saying was, wait. Now, why am I going through this story? And first, I enjoy telling stories. Second, I'm telling this story because it kind of depends on how you went about the PPP loan forgiveness application. Because the next thing that was done that I told the general public is, don't do it this way, is people had way more payroll than they actually needed. And so they said, hey, on the PPP loan forgiveness application, I'm not going to even put down rent, utilities, and interest. Like, why even try and figure that out? Kind of a waste of time. We have way more wages than we even have in a PPP loan, because we know we have 24 weeks with a PPP covered period. So why go through the hassle and the trouble to figure that out? Well, what happens when we're lazy? What happens typically, right? Now, we may be able to point to everybody else and say, hey, we got this figured out because I get to go home early. I figured out how to, take advantage of the shortcut. Ha, ha, ha. It's kind of seen as lazy. And so unfortunately, the laziness is going to cause people to have used more payroll for PPP loan forgiveness than they otherwise would have needed to require. So let's go through my example here. And everything that I just said is more than a story because it's going to go into now the calculations. Sometimes it's easier to understand numbers and calculations when you heard a story first that is teeing it up. So remember I told you that we've got 100,000 PPP loan. This example, somebody has payroll in the covered period, right? 24 weeks of 180,000. Now, don't get me wrong. Logically, it seems like, well, why wouldn't I just fill out a PPP loan forgiveness application, put down 180 in payroll and head to the bank, right? No problem if you want to do that. But what you've done is you've not reported any other expenses that could qualify for PPP loan forgiveness. And there's still some that for whatever reason still don't see the logic in this, and it doesn't make sense to me. But nonetheless, this employer has 40,000 in rent. So right off the bat, we know they only need 60,000 of payroll of the 180 to be used for PPP loan forgiveness, because in this example, they have the 40,000 in rent, utilities, and interest. And by the way, that's the maximum that can count towards PPP loan forgiveness is 40% for rent, utilities, and interest. So in this example, if somebody were to fill out a PPP loan forgiveness application and they go, well, I'm going to put 60,000 in wages, I'm going to put 40,000 in rent, utilities, and interest. Then when it comes time to calculate ERTC, they would go, well, of my 180, I've only used 60,000 of it for PPP loan forgiveness. Now there's more to this story, so you want to stay with me. But if they went ahead and just threw down 180,000 on the PPP loan forgiveness application, they're not able to amend the return, and they only can use what was actually filed with the SBA. They can't come back later and say, well, I did have rent, utilities, and interest during that period of time. Well, if you didn't report it to the SBA, it's now considered unqualified. It needed to have been that the SBA accepted the rent, utilities, and interest that you provided. So by not putting rent, utilities, and interest on the application and only listing 180,000, that means that 100,000 of wages had to have been used to achieve PPP loan forgiveness. So even if they put 100,000 down, well, they've used the 100,000. They don't get to go back now and say, well, I would like some of it to go to rent, utilities, and interest. So if we now have somebody that says, hey, you know what, I'm going to go ahead and put the rent, utilities, and interest on there. So with my clients, I said, some of these rules are changing. Why don't we put rent, utilities, and interest down? And, honestly, for most, it's like, if you just take rent for 24 weeks, it's probably at least 40% of what your PPP loan forgiveness application requires, and then put the rest down as payroll. So the moral of this story is whatever payroll was listed on your PPP loan forgiveness application, minus rent, utilities, and interest, no more than 40% of that, though, for PPP loan forgiveness application purposes, then that dollar amount is then all that was used for your PPP loan forgiveness, and therefore the remainder is available for ERC. Now, it's really, that's not even where the fun begins in trying to figure out the puzzle. So I've given you 3 examples here, and if you've bought the seminar, this is in the materials on page 287, 88, 287, 288, and 289, where you see these 3 examples that I put what I just explained to you, okay? But what we now look at is, what I've got in my seminar is, We know that for ERC, we're looking at it as either the dates in which there was a governmental shutdown, or if due to gross receipts, it would have been the entire quarter that they qualify. So in this example here, we've got a situation where the PPP is 24 weeks. So the covered period is the distributions on February 13th. So the covered period we have indicated there in orange. And then based on the ERTC, based on governmental, these are the dates that I'm providing in the assumptions. And then for ERC, here are the dates. But here's what I want you to note, okay? So let me just start with the end of the story, and then we'll come back. The end of the story is this. The 24 weeks, when you're taking into account the payroll, whatever number went on and had to be used to achieve full PPP loan forgiveness, whatever that number is, okay? And this is the part I told you in the beginning, when a tax professional, a lot of times, at first hearing of this, they think, well, this sounds like you're trying to do something that sounds kind of sneaky. And it's not, okay? But when you put in for the PPP loan forgiveness application, you are not identifying the specific time period in the 24 weeks in which the wages were used. And when you look back at the PPP loan forgiveness application, what it says right there on the application and what the IRS has said, both of them in black and white, if you qualify at the same time, you can pick either or. So with PPP loan forgiveness, the reality is, even if you did your calculation and you go, well, I used it for this time period, the reality is that what you turned into the SBA is simply one number. You've not declared to any governmental agency what time period in your 24 weeks was used for PPP loan forgiveness application. Let me tell you why that's actually very important, is that we know that even from the beginning and even before we knew ERC was available for those that got PPP, we knew this. You didn't have to use quote unquote first fruits of payroll towards PPP, meaning there's no ordering. The IRS doesn't say, well, when you get PPP, PPP has to be used first. And then when you've used up your PPP, then you can start taking ERC. Now, if you think that sounds like funny business, then hear it this way. We know that PPP is not based on, in essence, a time period. We know there's a covered period, but it's based on the use and the spending on actual wages. But remember this, with PPP, let me pull up that number here. So we know that there's a limitation, a little over 46,000 that can be used for any one employee. There's a different amount for 5% or more owners in a business in terms of the dollar amount that qualifies. And so I'm trying to see if I can find that number really quick. But here's my point, is that with PPP, just like ERC, there is a maximum that can be used at any given time related to each and every employee. And yeah, so it's 46,154 max per employee. The other thing is that you get health insurance for PPP in addition to that. We know for more than 5% owners, that's limited to just over 20,000. So you definitely can have, okay, we hit this time period with this employee, we've used up the max PPP we can use on that one employee, but this employee, based on their pay, goes over a much longer period. Let's put that on the shelf for a second. With ERC, we know it's the same thing. In 2020, it's a max 10,000 per employee for the entire year. It's 10,000 max per employee for each quarter in 21. Well, each employee is going to hit that 10,000 max typically at different times unless the pay is exactly the same for the two employees. So what I'm getting at is that you get to pick and choose, as I was just indicating. So what you look at is, if we go back to my grid, and it was more just to give a visual, is that we know that in the bottom where it says orange, we have our 24 weeks. And payroll needs to simply be a dollar amount to achieve PPP loan forgiveness with a max per employee during that 24 weeks. It's not cheeky to say, well, we can use wages at the beginning of that period for ERC. It's just how it is. So when you have overlapping periods, what I normally say, and most likely you've taken my seminar if you're here, but when you walk through the section where I talk about the mechanics, and then you walk through the section where I talk about maximizing ERC, really what I recommend is somebody's already gotten PPP loan forgiveness by now, is go through and first calculate ERC, because those time periods are typically shorter than the 24 weeks, right? It's a quarter or it's a time period when the business was closed. So of course it's going to be less than 24 weeks for the most part, or if it's close, it's still going to be some difference because covered period for PPP is exact days. For ERC, it's exact days only if governmental order, but then it's actually calendar quarter if it's due to gross receipts. So in the time periods that you have the overlapping, first see what happens if you use those wages for ERC, because most of the time, given that the covered period is 24 weeks, there will be plenty left to easily meet your numbers to achieve PPP loan forgiveness. So I give another example here. It's on page 297 of the most recent PowerPoint that is up on the website. But in this example, we've got somebody that has a PPP loan, $148,000. We know they've got to have at least $88,800 to achieve full PPP loan forgiveness towards payroll. They can have then up to $59,200 to rent, utilities, and interest. So in this circumstance, that was their loan, and I'm just pulling these numbers out of thin air for example purposes. But here's this client's circumstances in the 24 weeks. Here's their wages, health insurance, et cetera, rent, utilities, and interest. So they have way, way more payroll than they need for PPP. So the next thing we look at is, well, then what actually is available for ERTC? So I'm now comparing the two things. So on the left here is what is able to be used for PPP, right? It includes the dental, the vision, the state unemployment tax, rent, utilities, interest, et cetera. So a lot more expenses are available. For ERC, what is it? Two things: gross wages or the employer paid health insurance. So in this example, I'm plucking those two numbers out. Next, what we look at is, well, what are the wages that are even needed? So this would be a time period in 2020 for simplicity, which is, well, it's 10,000 max per employee. So for grins, let's say we go, well, we're going to use during that time period, 9,000 per employee of wages and 1,000 per employee of employer paid health insurance. Now you could do a million different combos. I'm just saying, I'm showing if we used the majority for wages and some of it for health insurance. So we've hit our 10,000 max per employee. We have 10 employees. So the max wages that can even be included with ERC is 100,000 in 2020, because it's a max 10,000 for the whole year per employee. So then what we look at is, I go, okay, if we're going to use 100,000 of wages during that time period, then what's left for PPP? So we have gross wages now, it's the original amount. So if I go back to that original amount, 327,000, and now I'm going to back out 90,000, there's still 237,000 left. Same thing with the health insurance. I've reduced down what was used for health. So as you can see, there's still plenty left. So again, what I'm recommending is you have PPP loan forgiveness is just one basic amount on the application. So when you now approach ERC, go and figure out what wages you need for ERC, then look to go, okay, if I back this out of PPP, do I still have enough that would count for PPP loan forgiveness? And most of the time, that answer is going to be yes. So again, I calculate ERC and then look at how much is it going to be backed out. All right, Brady, hopefully that helped. Justin, I appreciate the comment. So dumb, they don't even know how dumb they are. I love it. Let's see, NURIYA. If you send 941X without proper explanation of why you are qualified, do you need to send another Form 941X? No. If you look on the most recent instructions, and I updated both of my videos related to preparing Form 941X, as well as updating the seminar for this. But when the IRS came out with the updated instructions in April of 23, they added, at least as I recall, they added that they really do want a more detailed explanation line by line. Previously, now I didn't have any clients that I needed to file Form 941X on, but I did help some friends, helping some other CPAs prepare some 941Xs back a while ago. And I'm telling you right now, we just put amended tax return to report employee retention tax credit made available after the original filing of Form 941. And everybody got their money back. So all I would say is this. No, you would not refile anything. If the IRS wants the explanation, I don't see them denying it based on not enough explanation. What they would do is they would send a letter to say, your explanation was not complete enough. Now please provide a complete explanation line by line. So you do not want to send another Form 941X. I think it'll just muck up the waters pretty easily there. All right, we got Fred. So great question on that. Fred, how to handle amending a business return for ERC credit if you miss the I'm assuming 3-year due date to amend. Well, here's the deal. So I don't think we've missed the due date. Now I know why you're asking this. So bear with me, Fred. I know why you're asking this. So in today's environment, somebody else listening in today's environment where we are in November of 2023, the statute has not run on filing a tax return for refund for 2020. So in 2020, those returns are due in 21. We have a 3-year statute of filing for refund. Then it would be into 24 based on that returns correlating due date and any extensions that come into play there. The other aspect is there is no statute for paying money back. So if you now are amending the income tax return to pay money, meaning I now owe, I got an ERC credit, I now owe money because my wages are less, and now I owe. There's no 3-year statute on that. Now, if what you're asking is you're waiting to see if the IRS accepts the withdrawal, and then when they do accept the withdrawal, now you're going to go amend a return to reflect a correction of your previous correction. What I tell you is the 3-year is the 3-year. So in recap, no one's missed the 3-year statute of limitations for refund right now in November of 23, whether it's for payroll or for income tax purposes. And there is no statute that the IRS puts in play to pay them back. But again, if you're filing to amend a correction of your amended return, then you want to adhere to the 3-year statute. So hopefully that helps. All right, we've got Gia, due date for 941X, second quarter 2020 for ERC claim. So I'll tell you this, when you read the instructions for 941X, page 6, it's this, April 15th of 2024. That is the due date for 941X for second quarter of 2020. Now, when we looked at the versions of Form 941X instructions that were originally in play, I think it was October of 2020 had a version, and then later there was another version. Long story short, you could conclude, I know I did, that the due date was potentially the due date of Form 941 for second quarter 2020, which would have been July 31st of 2020 plus 3 years. Now, when you read, even in those older instructions, yes, they did talk about April 15th, but there was the provision that all returns had to be filed on time, all taxes paid timely for April 15th to be used for the statute of limitations. I'm not seeing that same kind of language. So again, I answered it right off the bat, and the answer is April 15th of 2024 is the due date to file for second quarter 2020 for ERC. We got Mark. If an employer had supply chain issues that resulted in delays of deliveries of materials being 6 months out or before, and had slowdowns on construction projects due to supply chain issues, would they qualify for ERC? Well, two major things would have to happen. Great question, Mark. Is the supply chain, there needed to have been a main supplier that employer directly relied on, and that supplier needed to have been under a governmental order. So the IRS in their examples in the memo 2023-005 make it clear in their examples that shipping delays, and even if it was related to COVID-19 issues, materials being delayed was very common. The IRS says if there's not a governmental order, there's no way that the business qualifies, like no way the business qualifies. Secondly, if the supplier does have a governmental order, they have to show, though, that it was due to that governmental order that caused them to not be able to deliver critical supplies. And so, unfortunately, even when you read the examples, the IRS is saying, listen, if you have a governmental order and it's shutting down the supplier, that doesn't have anything to do with shipping, right? Shipping delays causing the supplier to shut down, even though related to COVID-19, has nothing to do with the governmental order. So it's not just as simple as governmental order. It's as simple as, well, if there's not one, no way anybody qualifies. But if there is a governmental order, it has to be that specific governmental order is specifically causing that supplier not to be able to provide critical goods and services, and that employer relying on those critical goods and services actually did shut down and could not get those critical supplies elsewhere. So on the face, Mark, no, they would not qualify, because on the face, you didn't mention governmental order on the supplier. So even if you now add governmental employer, it would still be hard for them based on the facts and circumstances of simply supply chain issues due to delays in delivery of materials. So great question on that. Good, honest question. Zoom, Chip, if PPP from Form 3508 included all wages for the covered period, but not all those wages were needed to cover PPP, are these excess wages locked in and unavailable for ERC, or can these excess wages be applied to ERC? I'm glad you asked the question. I know you asked it before we answered it, so I'm confident what I already answered will help with that. But I am going to show one thing with this. I'm going to go back to one of these examples, and let's see. So yeah, in this example here, so example 3, page 289, you have somebody that did just that. They've got 100,000 loan. They've got 180,000 in payroll. They listed 180,000 on Form 3508, which is the PPP loan forgiveness application. Well, because the loan was only 100,000, then no more than 100,000 was needed to achieve PPP loan forgiveness. And therefore, the excess, the 80,000 in this example, would be available. One step further, you would look at, for the 100,000 during that 24 weeks, was there any time period that ERC was available? And if so, then figure out, well, what wages were needed for ERC during the covered period, because it very well may be that the excess 80,000 during that 24 weeks easily can cover both the ERC and that PPP. So good question, good way to follow up on it. Cody, is there a way a governmental shutdown for 10 days? Let's see. If there was a governmental shutdown for 10 days, what would I calculate for ERC off of, since there would be no wages during that time? Great question, because what the IRS talks about, and it's in the wage section of IRS Notice 21-20. So when you go through that section and it talks about qualified wages, what they put in there very interestingly is that it's wages incurred during that time period. And so I know that we can get ourselves going into a lot of different directions when we then say, okay, well, then where do you report it for Form 941 purposes? Is it when it was incurred or when it was paid? Well, the answer is when it was paid. But when you're now looking, and I don't know if I'm going to be able to find it quick enough, but when you're now looking at what wages qualify, I know that we go with that word paid, and the IRS says paid, but it's not at all the physical act of pay being given to the employee during that time period. And here's how we know this is true, because you might at first glance say, no, that doesn't sound right. Well, this is how we know it's true. Because what the IRS indicates is that if you have a situation, though, let's just say for grins, in that 10 days, there were 2 payroll periods. Let's say that there was weekly pay, and it just so happens that those 10 exact days of shutdown, there was 2 payroll periods. And those payroll periods then clearly covered more than the 10 days. And there's no way, when you read through the IRS's examples, they are saying, well, whatever you handed to the employee is what you get to include. Here's how we also know, when we look at it from the inverse, that this is true, is that I want you to remember that when we were in 2021, we were in a live situation with ERC, meaning it was ERC we could take as it was coming out, right? We weren't filing 941X. We were filing it as it was happening. So what the IRS would not allow for ERC is for somebody to go, oh, I know what we'll do. I know what we'll do. Before we get to the end of the quarter, in which we know we're down, and we know we don't think we're going to be down in gross receipts the next quarter. So let's hurry and pay everybody at the end of the quarter for next month. The IRS is not allowing that, and that's why they make it clear. It's based on when it's incurred. So on the one hand, we go, well, it sounds like when we say when incurred, that sounds kind of aggressive, but we always have to look at the other side of the coin. Well, it can't be when it's paid, because that's actually would be the more aggressive position to say, no, it's when I hand the money to the employee, no matter what that is. So with your question right there on the 10 days, Cody, so in the state of Oklahoma, we had 21 days. And check this out. The 21 days was in March and April. These were in 2 different quarters, 2 different months. And it being 21 days, it definitely, for most employers, had 2 different payroll periods, most likely paid inside that 21 days. And when you go through then my examples that I provided, so let's go first, we'll just jump into 2020 example, and we show the incurred in the example. So what we did is, and this is a live example of really what we did. So for the 21 days, and by the way, you report first and second quarter 2020 ERC only on second quarter Form 941X, period. So, but on 21 days, what's 21 days times 8 hours a day? It should be 168, but I did this 3 years ago. So let me double check that that is the case. Yeah. So 21 days. And for my example here, and for the example of, for sure, one of my clients, all the employees get paid the same. They're on salary. We break it down to an hourly amount. And we go, well, there was 168 days that these employees were paid. Now, it's not based on when they were handed the money of the 168 hours worked. It was when it was incurred. So you would take the 10 days and you would go, okay, whether they were paid the day after your 10-day period or they were paid 2 weeks after, in that next check, what was the pay that encompassed those 10 days? And then that is what would be included in your ERC calculation. Now, what'll really bake our noodles here, and what more matters is that you just get it right in terms of the calculation. But what bakes our noodles on this is that if we were between 2 periods in reporting Form 941, what I would be suggesting is that you would actually, though, report the ERC credit in the quarter on Form 941. So for reporting of payroll purposes only, not the calculation of ERC, but when you're now reporting the ERC, it would be on the wages, but then when paid. So we shouldn't be confused, because what I just told you is, how do you calculate ERC? There it is. It's based on when it's occurred. Now we jump into another universe called reporting numbers on a payroll tax return. And you would then report what it is as it was paid. And here's the deal. If you don't do it that way, I don't think there's a wrong answer. So if you go, well, no, I'm going to report it in the quarter in which they qualify. Great, do it. I don't think there's a wrong answer here. I'm more just pointing out how we went about it. And it was only because I wanted to keep consistent what wages fell into what period of time, and reporting the ERC on the 941 and when those wages were paid, so that things would match up there. We know that in the third universe, called the income tax world, that you report the credit in the year in which it applies, regardless of when it was paid. So there's really three spheres that we're dealing with. And if we're not in the tax world as often, we think that it's all in one universe, and it's not. You have a universe called ERC calculation. You have a separate and distinct universe called payroll reporting, and another distinct universe called income tax reporting. And how those things show up is not consistent from one to the other. What we have to ensure is what I said at the beginning. You have to ensure your calculation is correct. We can argue all day long what payroll period it goes on for 941 purposes, and I think that's irrelevant. We know we can't argue at all the IRS saying, no matter what, no matter when paid, you're going to reflect that credit in the year it applied to, due to tracing rules. All right, so I see we got a lot more questions. I just realized. So I've been answering long because I thought we only had like 4 left. I'm realizing, because I've never looked at comments before. Amanda always does this. So if I need to go a little longer, I sure will. All right, and I'll just be quicker now, knowing that I got more questions. Rachel says, I'm positive this is a scam, but I want to have backup when I tell church leadership this is a scam. We determined last year that they were not eligible, but they've gotten calls from a former pastor who works for a service working with churches, saying that the IRS has expanded eligibility to make it easier on churches and NFPs, not-for-profits, who had shut down to get ERC. I had researched everywhere and have found nothing. Am I missing something, or is this a shyster like I already told them? Well, I really appreciate it, Rachel. And your sniffer on this is absolutely on point. So it's unfortunate that you have a situation where you're now having to deal with a minister saying this, because everybody would want to trust a minister. So instead of going towards the minister, because you're in a church setting, what I would recommend is that you bring to the church leadership, and you can find it on my website if you haven't bought my seminar, but I would literally print for them IRS Notice 21-20, IRS Notice 21-23, Revenue Procedure 21-33, IRS Notice 21-49, IRS Notice 21-65. And I want you to point out to them, and you can have fun with it, that they're all written in English. They're all spaced, nice and neat. They're the same font. It's a readable font. It requires no interpretation. There's not a King James version. There's not a new version. There's not a new English version. There's just one version. It's called the IRS's version. Of course, I'm saying this so that maybe people will laugh with you. And you can say, since this is written in English, and even though every single one of you is going to say, well, I'm not a tax pro. Well, here is all the information. You go and read it and tell me where you say we qualify. Because the other reason I want you to print that out is that all of that information came out in 21. It is a bold-faced lie to say that the IRS has done anything new. They've not expanded eligibility. What they put in black and white in March of 21, in April of 21, in August of 21, in October or November of 21 is all they've come out with until they came out with IRS memo 2020-005. So the minister has been misled. Let's leave it at that. The minister has decided to be one of the sheep and is not being a shepherd right now. So with that, I would say this. If you all feel that that's the case, we know this. Where do we turn when we want to know the truth in a church setting? Do we go with what the minister says only, or do we find it in the Bible? So if a minister says we should all sacrifice our firstborn, do we say, well, but that minister said we should sacrifice the firstborn? The minister said that great things will happen if we sacrifice our firstborn. Does the flock, does the church go, well, the minister said, I guess we better do it, because if we sacrifice our firstborn, well, then we're going to get ERC money, right? Or would they say, well, interesting, is that in the Bible? Where is that in the New Testament, Old Testament, or whatever church you belong to, if it's Church of Mormon or whatever you got? It's like, well, where is that? Where is that? Where does it say that? Do we really want to do that? Because you are sacrificing your firstborn. This is something that can take away the church's, thank you, Rachel. This can take away the church's credibility. It can take the church's exempt status away, okay? It's criminal in nature to take advantage of anything with the IRS. And what I would also say, and guess what? This is going to be recorded, so you're welcome to just play this for them. Maybe I'm hoping that they'll laugh and have fun. But here's the other part, is that when we're looking at this in the setting of right and wrong, how do we base right and wrong? Okay. It's based on the word. Well, the word here is IRS notice such and such and such and such. That's the word. Okay. And unless you have church leadership that doesn't know how to read English, didn't graduate 7th grade, are literally dumb. These are dumb people. They're wonderful, sweet people, and they're wonderful leaders in the church, but they're literally dumb. They don't know how to tie their shoe. They don't know how to eat with a fork, okay? That's how dumb somebody has to be to not be able to just simply read, especially IRS Notice 21-20. It is written in layman terms. So somebody that sits there and goes, I'm confused, then it's like, then how are you in church leadership? How are you leading a church when you look at the Bible and then you're now telling the church to do certain things? How is it that you can't now simply read something that the IRS has put out and then now lead your church on what you think is right? So there has been no expanded eligibility. Bold-faced lie. There is nothing that makes it easier for churches to get this. The requirement is wages. The second is they shut down. Governmental order said, church, you shall not open. You will not open on Sunday. You will have to send everybody home and do it online. Okay? Is there a governmental order that says that specifically? Yes? Okay, you qualify during that time period. Now for a nonprofit, you look at your contributions. Are your contributions down in terms of that's the gross receipts compared to the same time period in the previous quarter or in the previous year for the same quarter? Yes, then you qualify. So I'm really getting off topic, but there's a really cool movie that I saw. And what was interesting about it is it said that sin is something that we usually like. Sin is attractive. We commit sin not because it's scary, but many sins that we commit, it's because it was attractive. It seemed good. It seemed as though it was a good thing. They said it was okay to go into the back door. They had the code. They said it was okay to go get money out of the till, right? They said it was okay that no one saw me just put that 5-cent stick of gum in my pocket. It's only 5 cents. I don't know that sin has any degree. The church I go to, sin is sin, whether it's 5-cent piece of gum or a $50,000 piece of gum. Sin is sin. And what is sin typically? It's attractive. And that's what this is. They are being tested. I'm going to tell you right now, they are being tested. And if now we go to the last thing, WWJD. Now we could look at that 2 ways, and this is where I'm going to now lose all credibility with your church leadership that's getting ready to listen to this part. So if you're in church leadership, you can end it now. But what would JJ do? Well, we know that's not what WWJD stands for. But what would JJ do? The same as what J would do in the WWJD. So now I want you to have leadership invite the one in, the son of, and say, we've got a minister told us we've got great riches that can come to us. And do you think that he will get mad when the church made the church into a marketplace? When did Jesus get mad? He went into the marketplace that was actually a church. So your church leadership should absolutely go get ERC if they can read it, because I know they're not dumb. I know they don't eat with their hands still. I know that they can read. And if the gross receipts are down, they qualify. If there was a governmental shutdown that literally shut that church down, and the church did shut down, they qualify. And then the whole church said, amen and hallelujah. All right, Rachel, hopefully that was enough. All right, Gerald, Schedule C, the one employee is the spouse. Would the spouse wages qualify? Well, tell you what, Gerald, if the self-employed has no living blood relatives, yes. So if you look at what a blood relative is, it's just that, right? It's a half, right? You got blood running through, you're a blood relative. We all know what that is. We know code section is spelled out related to this. But the self-employed is considered the 100% owner. Now, their self-employed earnings never would qualify. If they have a spouse, that's not a blood relative. So if that self-employed has no blood relatives, the spouse is included. However, if that self-employed does have blood relatives, then they fall under the rule that them being an over 50% owner is going to preclude them from qualifying for any other family. Because what the IRS says under family attribution rules here, what the IRS says is that the owner is 100% this spouse. The spouse of that self-employed, though, for these purposes, is also deemed 100% owner. Well, the only way 100% owners can qualify, or anyone over 50, is if they have no blood relatives. And we have the constructive. So this is covered in that section there, starting on page in video 11, 113. So great question on that, my friend. Let's see. I think Joseph, I already answered. How do I get payment from a refund? I think we already answered that. Rachel, I think is talking to Ray. So I'll skip over that. Looks like Ray and Rachel are conversing back and forth. That's cool. Let's see. GBAI. I'm going to probably have to come back to this and see. So GBAI, can you condense that down? That question there for me, please. I know you're giving me a lot of info there, but try and condense it. Ray, JJ, how can we find a sample of how to calculate ERC? Have you done another seminar? If so, can you share which one it was? Yeah, so I've got, if you go to my playlist, I've got a couple free videos in there where I have a whiteboard up. So look for the video that has a thumbnail with a whiteboard and writing on it. But then also in my seminar that's linked on my website, I've got an example of how you calculate 2020 and then how you calculate it in 21. So I give you two different examples. one based on gross receipts being down, the other due to governmental shutdown. And I do that for both of them. And then you have the Excel spreadsheets along with it. Trista. Let's see. So Trista, I'm not sure what you're referring to there. Maybe you were talking to somebody in the chat. So Trista, you'll have to clarify what your question is. Let's see. Let's see. 138396. JJ, can you professional ERC audit them from Dallas, Texas? Oh, I wish I could. Meaning I don't know of anybody down there, I hate to say. And so I'm sorry I don't have a referral there. Hollis, Q1 of 2020, can you clarify the credit starts on 3/13? Do wages count from 3/13 to 3/31 for the quarter or the complete quarter? Great question. So whether it's due to gross receipts or governmental shutdown, wages will only be included from 3/13 through 3/31, no matter what. And then all of those wages in that time period will be reported on the second quarter form 941X. Let's see. Eddie, is the updated seminars available to be accessed later? Yes. So my seminars, once you bought access, people have had access to it. And at this point, you'll just have, there'll be access to the same seminar you buy all the way until the statute runs in 2025. Let's see. Somebody said perfect answer, maybe for mine. Thank you. Dear the moratorium. Cass says, dear the moratorium, what should be the absolute latest for a payment to be issued after it has been assigned to the CARES Act team? That's what the IRS has been calling it. Latest for a payment to be issued after it's been assigned to the CARES team. There's no absolute latest for them to make a payment. The absolute latest for somebody to file Form 941X is the dates that we've indicated. But the IRS technically has no time period in which they are to send the money back. So there's no statute on them to send the money back other than reasonableness, if I understand your question. Dawn with 2 N's. Many of my clients are receiving letters from the IRS saying they received 941X for Q2 22, but they cannot locate it. Please resubmit. I only filed 941s for 2020, 21. So I'm sending a letter along with resubmitted quarters I believe may have been lost. Have you heard of this happening to others? Do you have any advice how to proceed that I may not be following? You know, that's interesting. We just had one client, but it didn't have anything to do with ERC. And all they did was resubmit it. And so I would just do it on a case-by-case circumstance. That is pretty odd, maybe coincidental. Eddie, if an employer had meetings every day with an employees and could no longer have meetings with this work, the business did not shut down, the income did not meet the requirements. You know, it's such a tough question on that one. I really don't have the best answer other than no. And what it would come down to is when you really kind of define the business, then really what was the employees needing to be at work for, right? So if the employees are in a retail setting and now employees are not able to be in the shop, well, then that has a very direct effect on the business in the sense of meeting customer needs, greeting them, ringing them up, putting stock out, you know, all that good stuff. So when you have employees and you go, well, we're no longer meeting, it's, well, did that actually have, though, any effect on the business? And I know you already said they didn't shut down, there wasn't income reduced. So, because the reality is that, you know, before the pandemic, you know, the IRS, and I'm kind of using as an example to say here, I'm coming up with my logic of, I don't think in that alone it's enough of a qualifier, but here's my logic. The IRS says, in a nutshell, you know, if an employer's meeting with employees and it's off premises, it's still considered a business expense, right? So if we're in a restaurant, if we go to a separate boardroom because we need more room and different tech, right, and we've got to pay for that, the IRS doesn't say, well, that's outside of your business, so that doesn't really count as business expense. Meaning, you can conduct, yeah. You can conduct business with your employee anywhere. So maybe it used to be at the offices. So if you can use Zoom and you didn't miss a beat, I just don't think that's enough. And I've heard some people argue and say, well, but there's camaraderie and I just don't see that as enough, unfortunately. So I think you'd have to dig for what was the real effect to the business. And given that it didn't shut down in any way, I think that's the biggest indicator for me to go, I would say no on that. Mario, if a home health agency could not go into hospitals or nursing home, would that be considered a mandate? Well, good question on this. So unfortunately, may not also be a clear answer here because it'd have to be why they couldn't. So hear me on this. We know that the IRS indicated in IRS Notice 21-20 that if you have if you have a customer that's been affected, that does not allow the employer to qualify. So here I would say that might fall under that realm. It feels like it falls under the realm of a customer, as in, going to the hospitals or the nursing home to see the customer, the home health agency. So going one step further, the nursing home is not going to let them in. Well, that's preventing you from going to your customer. How your customer is affected doesn't qualify the employer. So unfortunately, I don't think that qualifies a home health agency. But I would look at the governmental mandate or governmental order more carefully and seeing, well, are there reasonings behind that then more directly affect the home health care company? I don't know what those would be. All I'm saying is I would look at it a little closer to be sure, but on the face of your question, I don't think they would. Now, somebody may find circumstances that they do, but I don't see based on the one sentence question. R. Greenwell, if medical professional was mandated to only treat emergency cases, would that be considered a partial shutdown? I think yes. So in the state of Oklahoma, for example, dentists were precluded from practicing dentistry unless it was an emergency. And so if you have a medical professional and their business is not all emergency, then I would say that they would qualify. Now, if you have a business and they are the business of an ER and they then only treat emergencies and normal circumstances, then probably not, but that's not what you're explaining here. Follow on from earlier question, mask mandate. If I now refile as a discovery startup, will I have interest and penalties on interest I have received for a quarter? No, you're going to have on the tax amount, your interest and your penalties. End of story. There won't be interest on the penalties. It's just going to be interest and penalties because it's all based on the tax. Okay. Let's see, Gerald, 2020 ERC amended 941s have till 4/15/24 to submit. Correct. Because those were effective. Due date is April 15th of 21. Then we have the 22, 23, and 24. So you are correct. You have till 4/15/24. So if you get notices on separate quarters, Leslie asked, do you amend your tax return each time you get a notice? Yes. This is all quarter by quarter. Let's see, are the slides JJ showing here available for download? If you buy my seminar, they are. It's over 300 pages, 21 videos, over 8 hours. So on my website, you're able to get all of that, but that's where that comes from. Let's see. Now, if you were talking about the slides during the update, they were on the page right next to the Zoom link. Let's see. I'm not sure if my company filed 941Xs for 2020. CPA working with us left. Is there a way to find this out? Oh, yeah, absolutely. So that phone number that I provided to the IRS in the seminar slides, call it, press 3, and ask if Form 941X has been filed. And you should be able to also ask for a transcript. So I would ask for a transcript. Mike, great friend of mine out in California. Hi, JJ. I know this question may be a little off topic, but I wanted to see if you'd heard anything about whether the SBA is auditing first and draw PPP loans in excess of $2 million. My understanding is that the SBA IRS has up to 6 years on PPP loan forgiveness to audit the PPP loans. Great question, but I haven't heard of anybody getting audited. Now, of course, that doesn't mean anything per se, as you know, but I haven't read anything. I haven't heard anything about it. I don't have any clients or even any bankers. I've got 4 close bankers. I haven't even heard any of them indicating that there were any audits of any kind related to that. But yes, it is up to 6 years. Let's see. Nuria, let's see. Thanks for answering. You bet. Gia, thank you. Fred, thank you. You bet. Another great seminar. I appreciate that. Justin, S Corp owners who draw salary to meet reasonable comp rules, being the only employee, assuming they were forced to shut down and or they have a decrease in gross receipts, they do not qualify. Is this correct? Yes, they don't. They don't qualify unless they have no living blood relatives. And it is on the more than 50% ownership, which you've already answered to your question. So appreciate you, brother. Let's see, is the 50%, Gerald asked Justin's question, is the 50% rule attribution with the spouse? The spouse employee owns 0, Schedule C was owned 100% by the other spouse on payroll. So yes, it is applicable. So the spouse is going to be the same ownership percentage as the other spouse when they're 0%. So those attribution rules play. Now, a spouse is not a blood relative. So when you're looking around for our blood relatives alive, IRS says the spouse is not, obviously. So with that, if the more than 50% owner has no living blood relatives, then they would qualify. Let's see. Looks like good. We're getting close. I'm going to be right on time for once. Marion, let's see. How do I know when a client has received their refund check? Number one, I don't know. From the standpoint is I know we can't, check on status unless we call. So if you have power of attorney, you could call the IRS and inquire of the status. Other than checking with your client. Number two, how do I get a copy of the client's PPP forgiveness application with the SBA to determine what wages they reported for forgiveness? I would start with them getting it from the bank. The bank that they got the PPP loan from is where that PPP loan forgiveness application was submitted. Now, of course, the client should have a copy, but if they don't, then the bank would. So that's where I would go. Okay, GBAI, thank you. I think that you've condensed. So let's go here. Thank you for an opportunity to condense my question. We're finding various qualifiers for attribution, aggregation, and affiliation rules between the IRS, SBA, and various state agencies for qualifying disasters. For example, in a family-owned business with shared employees between 1120S Inc. and a 1065 LLC, both with agricultural and services, how should controlled groups be considered? Are there any strategies to consider with gross receipts and expenses between companies? So when I cover the aggregation rules, so I'm going to pull up real quick this graphic here. So what the IRS has made clear is that when you're aggregating businesses, you only look to the ownership. So it doesn't matter if it's a partnership or an S Corp or a C Corp or sole proprietor, you're going to look to the ownership. And crazy, it doesn't even matter the location. And now, whatever businesses have to be aggregated, you aggregate all of those businesses together to determine overall gross receipts in the quarters in 19, and then overall gross receipts in the quarters in 2020 and 21. And those overall gross receipts get compared to each other. And if they're down altogether 50% in 2020 or 20% in 21, then all of the businesses would qualify. Now, know this. So the example I usually give is you have a law practice in California and you have a restaurant in Florida. And we know California, a lot of things were closed a lot longer, stay at home, in shelter mandates and whatnot. Florida was open sooner, quicker. So let's go with the example that you have a law firm and, when you look at their gross receipts, they're up. They are not down in their gross receipts. Now, when you look at the restaurant, even though they opened back up, we're in Florida, the gross receipts are down. I mean, and they're way down due to governmental order is irrelevant. They are way down, just period, factually. Okay. So when you combine both gross receipts and then compare totals, well, if it turns out that the overall group is down, even though the law firm's gross receipts were up, the law firm is going to qualify. And again, this would assume that we have common ownership. Now, with aggregation rules, it's 50% or more. When we're talking about if owners can be included, it's over 50%. But when we're talking about aggregation rules, it's 50% or more. So what we're saying here is, let's just go with that example that you have 100% owner of a law practice, and then they own 100% of a restaurant. So they're in two different states. Now, let's say, though, you do combine the gross receipts, and you know what? They're not down. They're not down overall. So even though restaurant's down, law firm's up, but when you add them all together, they're not down enough. So they know neither business is going to qualify for gross receipts. However, now you take the law firm, and even though the law firm's gross receipts are up, I'm pretty sure, like if you're in San Francisco, I've got a friend out there and helped him with his ERC, and they had you had to stay home. Like, it wasn't even like you can't go to the office. It was like, you need to stay home. Like, you can't leave your house, right? So they're not able to see clients. They're not able to conduct business at all. Long story short, they had a governmental shutdown, like no question about it, right? Now, that's not a law firm, okay? I'm just telling you, I know that there's some really hardcore mandates in California compared to some other locations. So back to my law firm. They have a governmental shutdown. And let's say that governmental shutdown is lasting for 9 months. So the gross receipts aren't down, but that restaurant's been open. Okay. And so with the restaurant being open, you would go, well, how does that business qualify? Well, because the law practice is considered shut down, even though in a different state, a different business. Let's say the law practice is an S corp. Let's say that the restaurant's a C corp, right? Own both 100%. Different jurisdictions, different states, different mandates, different employees, but common ownership. Well, then both of those organizations would qualify for ERC, both businesses, during the days in which the law firm had the shutdown. One step further is then you do report, though, it based on where the wages are. So I think that answers that. There's not a strategy, though, unfortunately, because you just have to combine them. There's not a way to pick and choose when you're aggregating. And so aggregating can either help. So in the circumstances when you go, well, that doesn't seem fair. The restaurant was down, the law firm was up. So you're saying that the restaurant doesn't qualify because there's common ownership with the law firm and overall they were up. And it's like, yeah, they don't qualify. It's unfair. But then you look at the flip and you go, okay, wait a second. The law firm is closed, even though they were up in gross receipts. The restaurant is open and they're down in gross receipts, but the restaurant and the law firm are going to both qualify because in California, they had a stay-at-home mandate, governmental order. Like, yeah. So in some ways, it makes it go, like, wow, that's an odd way for someone to qualify. Or that sure seems like an unfair way. But here's the thing to remember is that with the ERC, it was in the CARES Act as it relates to the pandemic. So there's been an employee retention credit before the pandemic. It's just that in the CARES Act, they said, here's an employee retention tax credit related to the pandemic. And when the CARES Act came out, it very clearly stated that you could not get ERC if you got PPP. So if somebody took PPP, they couldn't get ERC. I think we all know that, right? But the law that they listed in the CARES Act, which is right there, Okay, so they have section 52 and 414. And these are controlled groups and aggregation rules, and they threw both of the rules in. And what this was to prevent, you got to think, CARES Act was in March 27th of 2020, right? World is shutting down, America's shutting down, a lot of uncertainty of what's to come. And at that time, that's when PPP and ERC was born into law in the CARES Act during this time frame. So Congress was looking very carefully to ensure that there was no way controlled groups that had to aggregate together, could get PPP and ERC. So this was really put in a way to ensure that groups with common ownership could not benefit from both programs. So it was very strict, and by including both of these IRS code sections, it did nothing but prevent. It didn't help anybody get ERC. It only would prevent, meaning when this originally came out, the spirit of that law, code section, the 2301D, where we find this in the CARES Act, the spirit of that law, as they would say, was to prevent. There was never an advantage to that. It was to prevent that law practice. In my example, if they got PPP, then there's no way that restaurant was going to get ERC, let alone the law practice. If there was common ownership, it would be, well, then the restaurant would have to get PPP because it couldn't get ERC. There was never a time that was helpful. However, when they updated the law in the Appropriations Act, December 27th of 2020, it was written very well, but it just said, if you got PPP, you now can take ERC, and it's retroactive. But they didn't address anything differently about what code sections determined aggregation. And these code sections have been around a long time. The code sections related to aggregation is nothing new. So these are well-established rules, regulations, law, etc. So anyways, I don't see any way to strategize there. And don't get me wrong, I get it. It's like strategize and, you're just trying to make sure that, if your client can get a credit, you can get a credit. So somebody was inquiring, where's the phone number? So on the slides that I provided to you, it is on page 21. And the phone number to call the IRS is 1-800-829-4933. You press number 3. And if you're the owner of the business, you'll want to have the most recent filed business tax return, because you're going to need to tell them how your business name and address appear exactly to the period, to the exactness. Is one way they verify, as well as your personal info. Or you'd have to have power of attorney. So anyways, all right. So yes, reshare the number. So I've got it there for Marion. Mike, thanks, JJ. Appreciate that. He says, great ERTC update. Much appreciated. Justin, much love, brother. Great to be with you today. Thanks for all the value and the laughs. I appreciate that, my friend. Let's see, what is the phone number? Got that running out, but JJ, thank you as always for being so great and helpful to give us this access and keeping on top of accounting and tax regulations. Well, I appreciate that, Ray, my friend. I know we've been together a long time. GBAI, thank you, JJ. Your answers are always a godsend. Well, I appreciate that. Carlos, I love it. I'm going to take a picture of it. Outstanding job, JJ. This is Wilbur. Very, very informative. Enjoy all the upcoming holidays. May God bless us all. Thank you. And the same to you, my friend. Take a little picture of that right there. So with that, I think we're to the end of the questions. And A. Benson, hey, how are you? My goodness, it's been a long time. A. Benson, I believe, was on our lives, like many of you, when we went live almost every day during the thick of the pandemic. So I hope you're doing great. Charlene, thank you. Happy holidays to you as well. Crazy that we're already there. Gerald, thank you. You've been a blessing since March of 2020. Well, thank you, Gerald. I appreciate that. And thanks for the long time support, friendship, and business. Appreciate that. Well, I think we're going to sign off, and you will get an email where you will be able to go back and watch this video. Now, I'm going to tell you that I think I have it set, and unfortunately, there's no way to change it. So let me make a note for myself. But I'm going to give you a link. So I'm going to add a link. So on the page where you got the PDF for this PowerPoint, you got the Zoom link, I'm going to add a icon that says video link. And when I have this uploaded, I'll put that, and that'll just take you early to the page of where you can watch this video. Now, if you don't go back to this page, that's fine. You're going to get an email, but I think it's in 52 hours. It's just how it's timed, and there's no way for me to change it. That would then have a link to the web page to watch this video. So Zoom, Chip, appreciate that. Thanks for all your help, JJ. All right, well, I think we're out of here. Let me hit end. And if somebody made it to here when we've posted it, appreciate you sticking all the way to here. Appreciate your business. And with that, got to end it by saying, thanks for tuning in. I love all of you. And then don't you ever forget, you've never met a CPA quite like me. And thanks to ADP and Erica and Haley. All right, we are out of here.